U.S. stocks post their biggest decline in a month amid concerns the Delta variant will hit to the global economic recovery. Now, investors now look to tonight's FOMC minutes for clues about a taper timeline. Cautiously hawkish, New Zealand refrains from raising rates as the Delta variant pushes it back into lockdown. It signals it plans to start tightening soon. And the Taliban pledge Afghanistan won't be a haven for terrorists. The U.S. freezes government funds held in U.S. bank accounts. So good morning, everyone. Let's also take a look at the futures. And actually, you can see they're pointing towards a higher open. This is after what we saw yesterday, which kind of had traders ask questions about what exactly we're looking at. A couple of course, theories out there that traders are now worried about a recovery. Once again, they're worried about not only this resurgent coronavirus, but the possibility of more viruses and variants to come. The dollar actually trimmed its advanced treasuries. Little change ahead of the release of the latest Federal Reserve minutes. Those are a little bit later on, and we watch as equity trading in Europe gets underway. You can see the Spain's IBEX down some 0.2%. One of the main questions that traders will have after buying the dip over the last couple of weeks and months on the Wall Street, equities is whether this will continue also into today. The CAC 40 is also opening pretty much unchanged. A couple of the other things outside, I would look at euro. I'd also look at pound currently at 137.44 against the dollar after we had some inflation figures in the UK that weren't as high as expected. So European equity markets opening, U.S. stocks posted their biggest decline in a month in yesterday's session amid growth and virus concerns. Now, investors will look to tonight's FOMC minutes for clues about a taper timeline and any concern about inflation. Well, joining us now is Elise Badois, Citi Head of Equity Research in the EMEA. Elise, as always, thank you so much for joining us on Bloomberg TV. Give us a little bit of a sense of actually where you see inflation going. So it seems that the market is really bifurcating. And we could see a lot of, I guess, correction in equity markets, but also certain industry really being left behind.
Yeah, I think, obviously, as a head of equity research, I always I have a bottom-up perspective on inflation. But generally speaking, our economists today are, seeing inflation peaking probably around November time, with the UK being well ahead of Europe. I think investors' concerns are really around, really not really where the peak is, because we expect a peak, but obviously whether we're going to keep those high level of inflations. In terms of specifically where we're going, we expect Eurozone to land probably around 2% at the end of this year, coming down 1.6% next year, and the UK 3.4% for this year, coming down to 2.5% next year.
Elise, is everything transitory at the moment?
Everybody. How are you doing today? Right straight to the business. I'm going to place an order to buy euro. The price I'm looking to buy 117.17. Okay, this is the price I'm looking to buy. So if you follow our trades, if you know what we're doing, please place an order and stay with me. Okay, and I'll speak to you later after we'll get filled.
in terms of obviously commodity prices, and you have to look at the roots of inflation and how that impacts various sectors. I think the thing we're most worried about certainly is probably wage inflation, because that's the one that we see as probably having the highest impact on corporates. We estimate that about 70% of corporate costs basically are around wage inflation. And our perspective and our economist perspective on the transitory nature of inflation is really around wage inflation. We believe that as recovery gets underway, as following schemes ease out, we're going to see a normalization of those trends. And obviously that's going to lead to wage inflation coming down. It's also less of a worry. Wage inflation is a lot less of a worry for Europe and the UK than it is in the US. So comparatively, we feel more comfortable in EMEA. But in terms of the rest of the source of inflation, for example, commodity prices, etc., obviously there are other factors potentially, including China growth.
We heard from Neil Kashkari saying there will be a broader economic implication from the virus resurgence, and actually the US is not immune to that either, Elise. Do you worry about the virus? Again, it seems that the market is trying to figure out exactly what it means, and I don't know whether you can play it thematically right now.
I think, in terms of, we can look at implication and what trades we're thinking about on the back of this. But generally speaking, the virus implication is, I think the biggest concern that I hear from our investors in our conversation is essentially this bifurcation between developed markets and emerging markets, and obviously the vaccine policies. In developed markets, you've seen a very strong vaccine rollout. The UK typically leading, and then that protection from the vaccine is actually happening. The approach in some developing markets is very different, sometimes due to lack of access to the vaccine, but sometimes also, perhaps if we look at China, really because the policy is to use different means to curb any new growth, potentially new lockdowns, new disruption, travel restrictions, and all of that has an impact on growth. So I think the fear around a new Delta variant is really around the response that's adopted, and we see a bifurcation in the response between emerging and developed markets. So our analysts in Europe, when they look at the various sectors, you've got different exposure. For example, if you're a luxury goods analyst, obviously you might be worried about those new travel restrictions, you might be very impacted. But then if you're a banks analyst, you're going to look at inflation, you're going to look at fundamentally now being able, having companies paying dividends, and actually your outlook looks not really disrupted by the virus.
Elise, thanks so much. Elise Badouader, Citi Head of Equity Research in EMEA, stays with us. Coming up a little bit later, we'll talk about we'll talk with the head of Norway Sovereign Wealth Fund, the largest wealth fund in the world. Don't miss that conversation. That's at 12:30 p.m. London time. Up next, we have Elise's top picks. This is Bloomberg.
They have been looking at outside of New York for offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we've really preached the mantra of flexibility. I think we've proven throughout COVID that we can be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history through a flexible work environment. So as we head back for the fall, we've really preached to all of our businesses to lean in and embrace this flexibility and go where the market goes. We're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market?
There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
There is an opportunity here for us to achieve a few things. One is create more value for shareholders through the merging of these two companies into a stronger, more resilient, more competitive company, and unlock synergies in doing so, which are quite material. Secondly, we give shareholders choice. So recognizing that some shareholders see opportunity in oil and gas, others less so, this gives them the choice as to how they want to allocate their portfolio.
And the value proposition for Woodside and our shareholders really is amazingly compelling. So with this merger, we will become a top 10 independent energy company, a top 10 LNG producer. We will have the cash flow, the balance sheet, and the financial strength.
Well, those were the chief executives of BHP and Woodside talking about the merger of their respective oil and gas units. So we're 10 minutes into the European trading day, and you can see some of these equities are actually holding on to gains of 0.2%. Nothing huge, but still, we were thinking that actually they could start lower because of what we saw in the U.S. yesterday. Now, let's also take a look at what's on the move this morning. So 3 movers for you, and of course, our Sam Unstead was talking about those about 20 minutes ago, giving us context as well. Carlsberg. Now, we start with Carlsberg increasing its earnings forecast for the second time this year. This is as they're citing surging demand for brands such as Tuborg Pilsner, as bars are reopening from pandemic-induced lockdown. So that's giving a nice little lift. I also know that, of course, margins may be a little bit bigger when you're selling directly to restaurants. Now, the other stock we're watching is Nel entering a development partnership with FC Energy. You can see one of the biggest risers in today's trading session, getting some 5.3%. And finally, Zur Rose. Now, I wasn't that familiar with the company. Now I know it's a Swiss pharmacy that you can actually have online. And according to Jefferies, Zur Rose is on track to meet guidance after some first half sales. And yet, investors actually having questions about their future, down some 3%. Now we're back with Elise Badois, City Head of Equity Research in EMEA. Elise, thank you so much for sticking around. We're talking a little bit before about inflation and kind of broader market trends. If you now break it down, I know you mentioned travel stocks as well, but if you break down actually what industry groups you would be heavily invested in right now or where you see value.
As you can see, it moved away. So I'm going to cancel order. Let's wait for another time. Okay, guys, please cancel your order to buy euro. Okay, stay with me and I'll speak to you later.
The first between value and growth is key. So I would mention financials. On tech, we've just recently globally gone back to neutral. So that would have been a good inflation hedge. We no longer want that. And I would say we're still really bullish on luxury goods and autos in particular. So those would be my picks, particularly with an inflationary backdrop in EMEA.
Elise, you talk about brand recognition. I mean, how important is it that it's actually companies, I guess, that have, are big enough and have enough brand recognition to make money across the world?
So I think, we've talked a lot earlier on the show about the inflationary backdrop. And obviously the key is to be able, when your costs are outpacing your revenues, the key is actually to be able to pass that on, potentially absorb it or pass it on to your, to the next, basically to your customers. And from that perspective, obviously companies have sometimes a weaker financial position at times post the pandemic. And so that branding and that pricing power is key. And we see that basically some sectors have more exposure to branding and pricing power. But within sectors, there are huge differences. I'll take the example of the auto broad sector. Within that, the suppliers are not really doing too well because they are really not able to pass on the price increases. But we think the OEMs, the large producers, obviously have branding and they're able to pass that on. So that's a good example where within one sector, you might recommend the sector, but you actually will have a difference of exposure.
Elisa, I think you also mentioned, technology and transport as industries of interest.
Yes. So again, within transport, you have the airlines who are obviously dramatically impacted by the pandemic. I mean, certainly we would not recommend that part of the transport space. However, the freight, is benefiting from underlying trends, very strong underlying trends in terms of e-commerce, and that's actually with the backdrop of inflation. They are within the group that we believe is able to pass on inflation as the economic recovery takes on, doubled up with the underlying wave of e-commerce. We think transport will do well. In terms of tech, I think, particularly, in the US and in Asia, we're becoming more cautious, we're more neutral. But actually in Europe, we would still recommend it. We still believe that, that they would be able to pass on basically the inflation.
Elisa, it's very clear that we had very strong, earnings results, especially here in Europe, with the strong free cash flow really being a highlight of these second quarter results. Going forward, do you worry about margins?
So that's a very important question. So I think H1 have, broadly the results have been really in line with expectations, with the rather high expectations, I would say. But I think going forward with margins, early in the cycle, in a cycle of recovery, what you see is actually you've got essentially the lever effect is actually working really well, and you can actually leverage is really working. So actually you tend to not have too much margin worry. But as we go into 2022, obviously in some places of the economy, we're going to see margins being eroded, and that's where sustained inflation could be an issue. Sustained issues in the supply chain or commodity prices, that could be an issue, particularly in some of the more cyclical sectors. And that obviously speaks to further value rotation. But for the moment, I think going into Q3 in particular, our analysts are still expecting very strong results. We still expect strong recovery, and earnings, we see very much upside risk to earnings rather than downside at this stage. So we're not too worried for margins at this stage.
Elise, thank you so much for joining us today. Elise Badois, their City Head of Equity Research in EMEA. Now let's also take a look at some of the events we're watching today. And Tencent is set to report its second quarter results this morning. The tech giant's outlook may be overshadowed by the risk of new regulatory crackdowns. At 9 a.m. UK time, Norway's Sovereign Wealth Fund, the world's largest, releases its earnings. Then at 10 a.m., we'll be looking out for the final reading of the Euro area CPI inflation. Bloomberg Economics expects to see a slight increase in the measure. And then at 3:30 p.m., the U.S. Energy Information Administration publishes its latest crude oil inventory report. We'll also finally be waiting for the release of the latest FOMC minutes, and they're due out at 7 p.m. London time. Now let's get straight to the Bloomberg Business Flash. Here's Rosalind Chin in Hong Kong. Hi, Ros.
Hi, Francine. Well, China Huarong Asset Management is poised to receive about 50 billion yuan of fresh capital. Bloomberg understands the recapitalization will be part of a plan to shift control of the embattled company to state-owned conglomerate CITIC Group. Huarong's plight has been the biggest test in decades of China's willingness to support troubled state-owned borrowers amid a record wave of defaults. Cathy Woods laid out her case for why she's pairing holdings tied to Chinese tech giants. The superstar fund manager also rebutted investor Michael Burry after the bet against her flagship ARK ETF. She says she doesn't believe Burry understands investment opportunities in the innovation space.
China has made it a priority to invest in innovation. I'm wondering if something's changing there, though. Since November, every month, there has been some new form of increased regulatory oversight, crackdown, social engineering, nationalizing the online education companies. It seems like that could be contradictory to their desire to become one of the most innovative countries in the world.
Twitter is adding an option for users to report misinformation for the first time, but says not all flagged tweets will be reviewed by fact-checkers. The experiment will be run in the US, Australia, and South Korea. Twitter says it will use the reports as a way to study misinformation on the platform and identify trends or problem areas to focus on. And that's your Bloomberg Business Flash.
Ros, thank you so much. Rosalind Chin there in Hong Kong. Now, coming up, Goldman Sachs and Morgan Stanley find some common ground on more stringent COVID restrictions. More on how the Delta variant is impacting banks' return to the office plans next. This is Bloomberg.
Exceptional Q2. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Replacing the dollar completely is unlikely, just because there's things that the dollar provides, like price stability, for example, that Bitcoin is not going to provide. I think even in a theoretical world where the US dollar collapses, even then, I think Bitcoin is not going to be able to provide the level of stability that users and businesses expect to be able to set prices in. And in that kind of world, we would need something else. It could be decentralized stable coins, it could be something else, but we'll see. But at the same time, I think cryptocurrency can still have a very powerful and important role alongside existing currencies.
It is not something that we would invest a lot in at this point. There's a lot of volatility, there's a lot of risk, which is not something that we're necessarily getting paid for right now. But for sure, we have the ability, because we are long-term investors, to explore new roads. And so cryptocurrency is one of them.
Now, the creator of Ethereum, Vitalik Buterin, there, and Kim Liu, head of the Columbia University Endowment on the future of cryptocurrency. You can catch both of those conversations this week. Kim Liu actually sits down with David Rubenstein on the latest episode of Bloomberg Wealth tonight, and Vitalik Buterin joins Emily Chang on Studio 1.0 tomorrow evening. Now, rivals Goldman Sachs and Morgan Stanley are suddenly in agreement on more stringent precautions for staff returning to offices. Sources say Goldman is working on new measures, while across town, Morgan Stanley has just informed staff that they must soon provide proof of vaccinations. Well, joining us now is Elisa Martinuzzi, Bloomberg News investigations editor. Elisa, thank you for joining us. So what are the details on the Wall Street changes?
Yes, well, as you mentioned, Francine, they're introducing some measures that I think are designed to make staff feel more comfortable with going back into the office amid the Delta spread. So, masks might be demanded in the offices. They're probably going to be running more COVID tests to prevent small outbreaks from spreading. And as you mentioned, Morgan Stanley is now going to be asking for proof of a vaccination and not just, taking employees' word for that. I mean, I guess the objective here is to, make individuals feel, as I said, more comfortable about going in. I mean, they may have been vaccinated, but, clearly maybe their families at home haven't been. And equally, it, may give companies a bit more leverage to encourage staff to going back in. As you know, probably the banks have been extremely vocal, some of the big Wall Street firms, about wanting their employees back in the office as soon as possible, because that's where the best work gets done. That's where creativity, flourishes, and that's where junior bankers learn the trades of the game.
Are banks, Elisa, now softening their stance on actually getting bankers back to the office?
Yes, no, as hand in hand with the tighter measures, they're also signaling there may not be a firm date for a return to the office. There's going to be more flexibility into the autumn. And, you've got to imagine that from here onwards, they'll have to keep playing it by ear and keep, reflecting what's going on in the world out there, particularly as we go into the autumn and we'll, start seeing, the regular flu taking off again.
How have banks actually responded to the plea for help from overworked junior bankers, apart from throwing money at them?
Well, that's interesting because, as earlier this year, there was a plea from a group of junior bankers at Goldman, who felt they were, extremely overworked and they were working crazy hours. And the immediate response was primarily measures to help to lighten the load. So, firm rules over weekend working or, rather, weekends off, and, free paid for vacations. But, more recently, it's resulted in higher pay. So you've seen right across Wall Street, from the boutiques to the larger firms, that, first-year salaries, second-year salaries going up significantly, up by more than 30% to in excess of $100,000. So money seems to be the way that, banks feel for now they can compensate for those very long days.
Elisa, at what level actually is the biggest talent war for? Is it, seniors, because we're seeing quite a lot of move-arounds, maybe people also leaving Credit Suisse, or is it the junior talent?
The juniors just as much. I mean, you have to bear in mind that, there's obviously other industries that are quite attractive. There's the technology industry. There's, even within finance, there are pockets of finance that, perhaps offer more flexibility and more sort of direct ownership of the business that is also attractive. And so, it remains to be seen whether the higher pay delivers that edge in talent acquisition among the junior bankers over the long term, because clearly these individuals at Goldman Sachs earlier this year spoke quite clearly of the drain that these hours were having on their mental and their physical health, and they're looking for something more.
Elisa, thank you so much. Elisa Martinuzzi there, Bloomberg News Investigations editor, focusing, of course, on financials. Now, coming up, Tencent is set to reveal the extent of damage from Beijing's regulatory crackdown. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the Open. We're 30 minutes into the European trading day, and you can see some of these equities actually holding on to gains, with the European stocks overall gaining some 0.1%, but actually the FTSE and the CAC 40 just turning lower a touch. Again, we're very thin volumes, so we're going to have a couple of quirky days just because it's August, and that's the kind of thing that happens on a summer holiday. The focus, of course, is on what happened in the U.S. yesterday. It could be a bit of profit taking. We could see the dip buying today. It could also be some of the option trading, and so traders trying to get ahead of that. Now, let's look at also some of the sectors on the move, because it also gives us more of an idea on where we see a little bit of weakness and strength. Travel and leisure, healthcare, real estate on the up. It's energy and basic resources that are lower. Again, at the forefront of investors' minds is exactly what's happening with Delta, whether that will hurt growth prospects, and then we have the FOMC minutes a little bit later on today. Now let's get straight to the Bloomberg First Word News with Rosalind Chin in Hong Kong. Hi, Roz.
Thanks, Francine. Well, New Zealand's found 6 additional cases of COVID-19 as it begins a nationwide lockdown, all connected to a single Delta infection linked to an outbreak in Australia. The New Zealand Central Bank refrained from a widely expected interest rate hike earlier, keeping the official cash rate at 0.25%. The RBNZ says the decision was made in light of the lockdown, but signals it intends to start tightening soon. South Korea wants to have 70% of its population vaccinated by the end of September, boosting rates that lag others in the region. In an exclusive interview with Bloomberg, Prime Minister Kim Boo-kyum says his government will continue aid to small businesses hurt by strict social distancing measures aimed at stemming a record COVID wave powered by the Delta variant.
One of the reasons why we think South Korea has succeeded in prevention is because we didn't turn to extreme measures like lockdowns.
And local officials in Haiti have raised the death toll from a magnitude 7.2 earthquake that struck the country at the weekend to more than 1,900. Rescue work has been hampered by heavy rains brought by Tropical Storm Grace. The U.S. National Hurricane Center said some places in Haiti have been hit by as much as 38 centimeters of rainfall. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Ross, thanks so much. Rosalind Chin there in Hong Kong. Now, Tencent is expected to post its first profit decline since 2019 as it reports its second quarter results later this morning. The earnings may also be overshadowed by questions over the ongoing regulatory changes in China. Beijing's internet clampdown has sent some investors fleeing, with Tencent shares tumbling over 40% this year. Well, joining us now from Hong Kong is Matthew Canterman. He's Bloomberg Intelligence tech analyst. So, Matthew, good morning. We were talking about some of the numbers today. I mean, this is really the epitome of the crackdown in Beijing. So what are you expecting to happen?
Absolutely, and you know, you're talking at the top of the hour about the spread of Delta. You know, we would, you know, in normal times without the regulation, we'd be talking about how, you know, more people staying home is good for Tencent with games and online services. But in reality, you know, the only talk right now that's relevant is the regulatory environment. We don't have a sense of how badly the long-term growth and the long-term cost structure of this business is going to be affected, and that's why the stock has, you know, tumbled 40-something percent, 43% year to date, or from the peak in January. You know, this could drag out a lot longer as long as the uncertainty lingers. And, you know, although, you know, we've roughly kind of matched the decline from 2018 with the gaming crackdown, you know, I think just the breadth of this regulatory crackdown is so much broader that it's tough to say, you know, if there's end in sight.
So how long will this regulatory situation actually play out? I mean, this is like the trillion-dollar question. I feel like it's the most difficult question I'm asking anyone today, Matthew.
Yeah, I mean, it's the $400 billion question, right? Because Tencent's lost about $400 billion of market cap in the sell-off. And yeah, I mean, you know, again, if we look back at 2018, which is probably the closest proxy, you know, Tencent's stock bottomed after about 6 months of selling off peak to trough. roughly the same magnitude that it's sold off now. But the rules weren't really fully in place until about 12 months after the crackdown started. So, given that this is a much broader regulatory, hard dive into various segments of the consumer technology space in China, this can probably drag out a couple more quarters for sure, we think.
Matthew, with the stock down 43% from its January high, so what's the current, valuation here?
I mean, the valuation's cheap if you believe the numbers, but the problem is that, the forward numbers don't necessarily take into effect any sort of the regulatory environment. I think, people are talking about growth slowing, and to be honest, I'm less worried about growth slowing, and I'm more worried about costs going up going forward. If we look back at Facebook in, I believe it was late 2018, 2019, when they started hiring content moderators to, parse out the content on their platform, that tanked their margins, and the stock really took a hit then, and it took a few quarters for both the margins and the stock to rebound. And, something similar could happen with Tencent if they're forced to hire lots of people to manually, moderate content across its platforms and manually, manage everything. That can be a huge drag on costs for the next couple of years, we think.
Matthew, thank you so much. Matthew Canterman, their Bloomberg Intelligence tech analyst. Now let's stick with China. Just before the latest government crackdown sent Chinese stocks tumbling, hedge funds were actually loading up on the shares. The latest filings paint a picture of an industry blindsided by the government's actions. Well, let's get the latest with our Danny Berger. Danny, good morning. So just how wrong-footed were some of these hedge funds heading into the crackdown?
Very wrong-footed, to put it very bluntly, Francine. We have a lot of these hedge funds, Tiger Global, for example, that have been investing in Chinese ADRs listed in the U.S. for decades, but still, going into the most recent crackdown from the government, exposures were very, very high. I put a few of the stocks here, Alibaba, JD, Baidu, NIO, for example, some of them as high as nearly $10 billion that hedge funds held in market value as of June 30th. Now, it kind of varies as to whether that's an increased exposure or a lessened one. For example, Coatue, Viking, and Melvin Capital, just to name a few, had added up on JD.com in the most recent filing. Now, you might look at this and say, okay, this is June 30th. It was the end of the last quarter. How much do we really care? Perhaps they could change their positioning quick enough heading in to these regulatory crackdowns in order to avoid the worst of the problem. But here's the thing. If that is the positioning from June 30th, 2 days later, so 2 days after they have their 13F filings, or at least what the 13F filings reflect, you have China issuing a warning for Didi. And then we get a 30% decline in U.S.-listed Chinese companies. So they literally would have had to change positionings maybe within 2 days in order to avoid some of the worst of the sell-off. So it's really inevitable here that hedge funds took a very large hit on these shares, which they've been loading up on throughout the years.
So where are we now, Danny? I mean, it's an incredible chart, actually, looking at it like that. Is it likely that they've sold off their positions?
It will definitely vary fund to fund. I mean, you have, again, someone like a Tiger Global who's been there for 2 decades. It's hard to imagine that they'd completely do away with their Chinese exposure, that they do something similar to what Cathie Wood did and sell out on China. And here's just sort of an encapsulation of 2 different very opinions. So you have Ray Dalio, for example, last month writing on LinkedIn saying that, okay, don't over-focus on what he calls the wiggles. That's his words. Basically saying that this isn't an anti-capitalist streak in China. It's just a different form of capitalism than what the West is used to. But on the other hand, you have Paul Marshall from Marshall Wace. They're the hedge fund based here in the UK, saying that the timing of their crackdown on Didi is really discouraging for investors, and the risk premium attached with these Chinese ADRs makes them nearly uninvestable. So someone like this really warning their clients that this is not a space you want to be in. So again, Francine, these are 2 very different opinions, and you often do hear that just China is so big that at some point you just can't avoid investing in them.
Yeah, it's so true. Danny, thank you so much. Great reporting there by our Danny Berger. Now, coming up, Taliban leaders assert their authority over Afghanistan. President Biden faces growing pressure over the U.S.'s messy withdrawal from the country. More on that next. This is Bloomberg.
we talk about those NPLs, will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
We were clear-eyed going in when we made this decision that it was possible that the Taliban would end up in control of Afghanistan. We were clear-eyed about that. Now, as the president said in his remarks yesterday, we did not anticipate that it would happen at this speed, though we were planning for these potential contingencies.
I am deeply saddened by what I see unfolding in Afghanistan. NATO's focus right now is to ensure the safe departure of personnel from allied and partner countries and of the Afghans who have helped us.
We'll have to get in touch with the authorities in Kabul. The authorities in Kabul, wherever they are. The Taliban have won the war. So we will have to talk with them.
Well, Jake Sullivan, Jens Stoltenberg, and Joseph Borrell, they're speaking on the continuing fallout of the U.S.'s messy withdrawal and the Taliban's rapid takeover of Afghanistan. Now, President Joe Biden is facing growing pressure, both domestically and from allies, over the growing chaos. For more, we're joined from Doha by Bloomberg's Simone Foxman. Simone, I know you've been hitting the phones and trying to get people on the ground to speak to you. So what's the situation like right now?
Yeah, well, from what we understand, the focus is still really on the Hamid Karzai airport and what's going on there, and how people elsewhere in Kabul who've worked for diplomats, worked for Western embassies, worked for NGOs, who have even the ability to get on one of these planes are actually going to get there. We've seen reports of crowds outside the airport, but also that the Taliban have checkpoints essentially encircling the airport, and so people can't necessarily get through. This raises the potential for really bad tail risk scenarios. You think sort of hostage crisis and stuff, and that is the focus of discussions really going to be between the United States, which has some 11,000 U.S. citizens that have said, we're here, get us out, and the Taliban probably going forward, and that's what we're going to watch in terms of diplomacy.
Yeah, the U.S. reportedly blocking Taliban access to government accounts in the U.S., Simone. Janet Yellen being urged to block IMF funds. How does this feed into the overall diplomacy efforts?
Well, key for the Taliban going forward, they want this international legitimacy, and partly about money. The former central banker in Afghanistan told the Dow Jones that there are $9 billion sitting in Afghan accounts, government accounts around the world, and that if the U.S. cuts off access to these funds, they'll only be able to access about 0.1% of them. So not only did we see the United States essentially say it's going to freeze assets in bank accounts that are in the United States that were owned by the Afghan government. But we're also seeing 18 Republican lawmakers appealing to Janet Yellen and saying there's money from the IMF that's supposed to go out next week, next Monday, August 23rd, some $500 million. Yellen, please intervene. Don't allow this money to go to the Taliban.
Simone, thank you so much. Bloomberg, Simone Foxman in Doha joining us. Now, for more on this, we're also joined by Bloomberg's Bobby Ghosh, who's been writing some really fantastic opinion pieces. Bobby, so, you know, the Taliban are saying that they're different, that they're new. They claim to be more inclusive. Is that actually going to be true?
Well, they're telling us what they think we want to hear. There are two things to consider with that. A, that there is not one unified Taliban. It's not one monolith. There are different factions within the Taliban, more extreme factions and less extreme factions. The latter are currently holding press conferences in places like Kabul. We'll get a clearer sense when the high command arrives and takes charge of the situation, and we'll look to the kind of government they form, the kind of policies that they immediately announce. And that will take place over weeks and possibly months. The other thing to keep in mind is that rather than watch what they're saying, it's important to see what they're doing. There are parts of Afghanistan that have been under Taliban control for years now. And the picture that we've seen from those places do not inspire a lot of confidence. The things they're saying in Kabul were not the things that they were doing in those provinces that they have controlled for a very long time. There, women do not enjoy freedoms. There, they rule with a very repressive and oppressive hand. So there is talk now about a Taliban 2.0, but I, for one, will believe it when I actually see it. The words are not enough.
Bobby, you say the President Biden was disingenuous and dishonorable in blaming the Afghan security forces for failing to stop the Taliban. Can you explain that?
Well, the president basically in his speech the night before last to the American people said that the United States should not be required to protect a country when its own armed services would not do so. Now, that's, I think, disingenuous because it does not take into account the American role in creating those armed services. If the armed services fails, then the American role has to be acknowledged, has to be taken into account. Also, it doesn't take into account the fact that the Afghans have been fighting for 20 years against the Taliban. 66,000 Afghan police and soldiers have died in that fight. That is by a magnitude larger than the American casualties and the Western casualties. It's dishonoring the memories of those people to say that the Afghans simply did not stand and fight. And then finally, there's also the element of what the American withdrawal did, not just to the morale of those forces, but in practical terms. The withdrawal of the Americans essentially grounded the Afghan Air Force. The Afghan soldiers had to fight without air cover. That is a fight no American soldier is required to undertake. Why should we expect a different standard for Afghan soldiers? Now, the Afghan soldiers did surrender or withdraw rather quickly. There is enough blame to go around for a calamity of this proportion, but I think it's disingenuous for the American president to simply put all the blame at the feet of the Afghan soldiers.
Bobby, you say that the U.S. created the wrong kind of Afghan, army. So what mistakes were made?
Well, there were several orders of mistakes. First, the recruiting and training was done in a very rushed, haphazard, and slipshod manner, often handed off to contractors who had very little accountability, very little oversight from the Pentagon. So the army that was created was substandard right from the beginning. And we saw this happen in Iraq as well. And let's not forget that when the United States withdrew there and ISIS came roaring into the north and west of the country, the Iraqi forces there, just as we saw in Afghanistan, collapsed. The other problem, and this is a little more philosophical, is that the Afghan army was created in the mold of the American army, a big army heavily reliant upon air support. That's not the kind of fight that the Afghans were in against the Taliban. You're dealing with a very different kind of enemy in a very different cultural setting, in a very different terrain. So creating a facsimile, if you like, of the American army and plonking it down in Afghanistan is not enough. It's not enough just to say, well, these are Afghans and therefore they know how to fight. It is how you set the battle order that matters. And I think that's where there was a fundamental failure of appreciating that this was a different kind of country, a different kind of fight, and therefore they would need a different kind of armed forces.
Bobby, thank you so much for all of the insight, and I urge everyone actually to subscribe to Bobby Ghosh's columns and also check him out on social media and the website. Joining us this morning, of course, on Afghanistan. Coming up, eyes turn to the FOMC minutes later today with investors on the lookout for any clues on tapering. We'll dig back into the markets next. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We're about 50 minutes into the trading day, and you can see we're seeing a little bit of a reversal. So the Stocks Europe 600 pretty much unchanged. The FTSE, the DAX, and the CAC were gaining just half an hour ago, and now they're down some 0.2%. Again, volumes thin. It's August, so just don't forget about that. But then the main question is what we'll see from the FOMC minutes, and then the other question, of course, that's weighing on everyone's minds is, does the Delta variant change prospects for world growth? Now, joining us to talk about the markets is Noor Al-Ali from Bloomberg MLive. Noor, good morning to you, and what are the major themes from markets today?
Good morning. Thank you for having me. Well, look, everyone's talking about the calm before the storm, but let's just highlight the three main things that we're thinking about today. You've got UK inflation data that came out at a slowed rate, just as expected, even less than expected, actually, which is pretty good for the sentiment here. Also, you've got the FOMC, as you just said later, and the whole Fed tapering discussion just back in the front seat here. And the third thing that we're looking out for just after the top of the hour is Tencent earnings, and obviously the impact of the China clampdown on the big tech companies that are out there.
So, Noor, overall, what do you think? Like yesterday, there was, quite a, I don't want to say a big market move, but for the first time in ages, actually, Wall Street finished lower. Was this really on concern about the virus taking hold, or is it just a bit of a funny August day?
Well, it could be a little bit of both. I mean, you could make the argument that, reality is just starting to set in, and the stock market is finally seeing that realistically there is slowed growth prospects. You've got the whole discussion about tapering, whether or not that's going to be delayed or not. And also it's August. Most of the people aren't around, so low volumes do carry a bigger weight when it comes to moves there.
Is there anything else? So what are you expecting from FOMC? I don't know if you were expecting quite a lot from Jay Powell yesterday and therefore were a little bit disappointed, or whether actually it's just all about Jackson Hole, so he was not in any way, shape, or form going to front run that.
Well, honestly, I've been in the camp of, I think we're just going to have to wait to Jackson Hole to hear anything. But there has been some movement there. You've had Kashkari come out yesterday. I mean, and he's a known dove, so let's not get too excited there. And he's re-highlighted the Delta variant concerns. I mean, we do have the FOMC notes coming in later, but let's just keep in mind that the concerns with regards to the Delta variant are a lot more heightened than they were back then when the minutes were, when the meeting was conducted then. So I think Jackson Hole will give us some indication. You have two camps here. Some people will tell you, look at the data. It's telling you slowed growth. You've got consumer confidence that really plunged, as we saw last week. You have spending going a lot less in the U.S. as well. But then you also have NFP data that came in massively above expectations. So you've got two camps here, and it's pretty much a guessing game, to be honest, on what the tapering debate will go next.
Yeah, well put. Noor, the other question is, of course, what's happening in China. And we also heard, today there was some cryptic messages about the elite giving back to a more, I think, fairer society. How much further are they going to crack down with regulation?
Well, it's all a question of how the companies react in the equity market at the moment from a market's perspective. You've got Tencent coming in later. Some of the things that we need to look out for here is their second quarter net income. The number to beat there is a 7.1% decline. If they do better than that, then maybe they could carry some of the equities through and some of the indexes that they carry through. Yeah. So let's watch out. Yeah.
Let's watch out. Noor Ali there from our MLive team. Now that's it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
What were the numbers from the equities division? How well did it do?
Well, first 28% decrease as compared to a very, very good Q2 in 2020 is a good resilience, and it's a decrease that is much smaller than the one we have seen with some competitors.
The demand picture remains really strong off the back of a healthy underlying Chinese economy, but it's not just China.
We get to make our decisions independent of political control, direct political control.
There will not be any more mining. Ethereum's energy consumption will go down by like a factor of more than 1,000.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, 18th of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Taliban leadership in exile returns to Afghanistan. The White House says it's in contact with a militant group to allow safe passage through the airport. COVID-19 cases rise in lockdown Australia and New Zealand. The RBNZ holds steady on rates, worried about the impact of the outbreak. Attention turns to today's Fed Minutes. Plus, wildfires rage through France and Spain. More than 10,000 people are evacuated from the Saint-Tropez region. What role can finance play in mitigating the climate crisis? So, U.S. stocks have posted their biggest decline in a month amid growth and virus concerns. After a positive session through much of Asia, European equities and U.S. futures are now searching for direction. Attention turning to Jackson Hole Symposium next week, which may, of course, offer clues on when and how the central bank will taper bond purchases. Now let's get straight to our market story with Danny Berger. Danny, great to have you back on the markets in this hour. I've missed you. When you look at investors, I mean, first of all, volumes were quite low. And it is true that markets are kind of looking for direction.
Yeah, absolutely. Look, it's one of these weird summer months where maybe more people are off the desk. And then you combine that with the fact we get FOMC minutes later. You also have Jackson Hole on deck. So all of those means we're not going to get too much participation in this market. So markets really struggling to climb that wall of worry. We're continuing to see U.S. futures drop after the biggest drop in the cash equity market yesterday in about a month. And European stocks also falling just about 5 basis points. But still, it's this directionless where the center of gravity is lower because of some of these growth concerns. You mentioned the RBNZ also putting rates on hold after just one case of COVID. It shows how the market story and the central bank story can really turn on a dime. So just continuing on from this kind of idea of the wall of worry and not being able to climb it today, we are seeing some of the havens perform better, gold being one of them. The VIX also hanging around 18%, pushing up to 19% yesterday, its highest in about 2 weeks, Francine.
So, Danny, what about VIX? Are investors prepared for higher volatility?
Well, there has been a lot of option buying to prepare for some bearishness for the past couple of weeks. And I think that kind of is normal when you have a market that is climbing. It's healthy to see people going and buying protection. So we see it in options. In the latest Bank of America survey, people were buying healthcare as their #1 sector, something we haven't seen in over a year. But this really encapsulates what the volatility picture looked like heading in to yesterday's more slumping market. This is the volatility of volatility, the VVIX. It tracks options around the VIX itself versus the VIX. So basically, the volatility of the VIX had been climbing higher, heading up beyond a premium of 7 percentage points heading into yesterday. And all of this just suggests, Francine, that people were hedging. So if the market fell yesterday, at least some smart money wasn't caught out wrong-footed.
Danny, thank you so much. Our Danny Berger there with the very latest on the markets. Now, the Taliban leadership in exile returns to Afghanistan. The militant group has pledged not to target neighboring countries. At a press conference in Kabul, its spokesperson promised it would build an inclusive government and protect the rights of women.
God willing, in accordance with Sharia law, we will allow women to work. Women are an important element of the society, and we will respect them. In all walks of life, where the society needs them, they will have an active presence.
Meanwhile, the White House says it's in contact with the Taliban to allow safe passage through the Kabul airport. The U.S. is seeking to finish its evacuation by the end of August.
We are engaging diplomatically at the same time with allies in regional countries and with the United Nations to address the situation in Afghanistan. We are in contact with the Taliban to ensure the safe passage of people to the airport.
Well, joining us now for more is Bloomberg's Simone Foxman from Doha, where until recently the Afghan government and the Taliban were holding talks. So Simone, good morning. How credible are the Taliban promises?
Yeah, I mean, really, we'll have to see it to believe it. They're saying all the right things that the international community wants to hear at this point. Rights of women, also amnesty for people who worked for the previous Afghan government. But in reality, there are reports on the ground that various journalists, members of the previous government, have been targeted in some way, or at least they're getting, scary knocks on the door. Frankly, you mentioned that the safe passage for U.S. citizens and other folks, diplomats to the airport, that's not something we are necessarily seeing today because the Taliban have surrounded the Kabul airport with checkpoints. And we hear a lot of reports that people have not necessarily been able to get through. And there's just not a lot of clarity about how this is going to change going forward.
Simone, what is the situation at the airport now, and what does this mean for evacuations?
Yeah, well, I mentioned that there do seem to be checkpoints around the entire Hamid Karzai Airport complex. While the situation in the airport itself is rather calm, there do seem to be lots of people gathering outside. The United States, the White House has said 11,000 American citizens have essentially put up their hand and said, I'm here in Afghanistan. They're going to try and get those folks to the airport if they are in Kabul. But there are many times that a number of people who are in some way associated with the U.S. government, with the Afghan government, or with NGOs, and would have that visa be able to go to the United States or elsewhere. And it's really unclear how the numbers make sense, how all those people are simply going to get to the airport, to get on these flights, to come here to Doha or elsewhere.
Simone, thanks so much. Bloomberg Simone Foxman there in Doha. Now, coming up, a single case sends New Zealand into lockdown while the Texas governor tests positive as cases surge. We'll get into the diverging strategies to tackle COVID outbreaks. That's coming up next, and this is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
This is Venezuela, a country that has suffered one of the greatest economic and humanitarian crises in modern history. Today, it appears Nicolas Maduro and his government are prepared to negotiate an agreement that might end U.S. sanctions and pave the way for free and fair elections.
Hopefully we can find paths of closeness, of respect.
Join Bloomberg Television for a special report, Inside Venezuela, Friday at 7.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. You know, there is a major split in how countries are tackling coronavirus outbreaks. New Zealand has largely managed to avoid COVID, but a single case has now sent the country into lockdown. Meanwhile, some U.S. states are taking the opposite approach. Texas Governor Greg Abbott has now tested positive amid a surge of cases in his state. Now, he reopened the Texas economy and lifted restrictions 5 months ago. Joining us now is Bloomberg's global biosecurity correspondent and senior editor Jason Gale in Melbourne. Jason, great to speak to you again. There are such diverging views on actually how to handle it and what the ethos of the country where you're in is. I mean, is there a right approach and a wrong approach, or does it just depend on what you value most?
Well, look, the right approach is vaccination, and clearly that is a very important step in ending the pandemic. But we know that vaccines alone are not enough. We know from right at the beginning when the efficacy data coming out was that they don't provide a perfect shield. And so with Delta, which is even testing the limits of vaccines further, we know that we need to be doing more. We need to be wearing masks, maintaining social distance, not gathering in large numbers, improving indoor ventilation. All of those things are going to be incredibly important in reducing the transmission of the Delta virus, Francine.
Yeah, so Jason, if you look at what's happening in New Zealand, are they trying to basically have, you know, zeroed COVID cases full stop, or is it until they have critical vaccination?
At the moment, vaccination rates are not sufficient to do anything other than try to suppress the transmission of the Delta variant in the community. The problem with Delta, Francine, is that the virus, this particular variant, it replicates very, very fast, much faster than other variants. So people are infectious earlier than they were with previous variants, and that makes it much more difficult to do the contact tracing, to identify cases, and then the people who have been in contact with those cases and to prevent those chains of transmission. It's almost impossible with Delta, as health authorities here in Australia and New Zealand are finding, without instituting these lockdowns, which quite frankly everybody hates, but that seems to be the only way of stopping transmission when you don't have sufficient levels of vaccination.
Jason, thank you so much. Bloomberg's Jason Gale there. Now, we're also joined by Simon French, chief economist at Panmure Gordon. Simon, I know we're not virologists. We're not all of us are virologists. Jason probably is. But when you look at, first of all, good morning. When you look at what the market is worrying about is, you know, coronavirus hurting growth. I mean, we've been worrying about that for a year. Is anything changing, or do market worries just reflect a bit of a, you know, lousy August day?
Yeah, good morning, Francine. Well, I think the dynamic has changed. I think Jason captured it well regarding this race to be vaccinated, which clearly some of the countries that are pursuing a zero COVID strategy are behind on the vaccine rollout, and therefore they have to play that strategy for a longer period of time. But in terms of how our discussion that we've had for more than a year about it impacts growth is, I don't think there is a trade-off between growth and restrictions. I think that's a bit of a misnomer that's been allowed to be created. What you see is populations make their own judgment based on the data they see. Now, you could argue in New Zealand, you know, the economy forefront of the last 24 hours of news flow are taking a very restrictive approach. But that is specific to the country and the geography in which they operate. It isn't going to be fit for purpose for the more integrated European, North American countries, but it works for them. And actually, you know, the economy has recovered pretty well and has managed to insulate, through the actions of the central bank and the fiscal authorities, from a closure of its international borders by insourcing a lot of domestic demand.
What does that mean, Simon, for actually, I mean, if you look at the hotspots for global growth, is there going to be a bifurcation on what growth, you know, where growth does better, not because of infection rates, but actually just on how they deal with lockdowns?
Yeah, there was some interesting commentary, I thought, from the New Zealand Central Bank overnight defending their decision to leave interest rates unchanged. They talked about, and I think this is the correct interpretation, that economies have shown to deal with spikes in cases, in infections, and dealing with it at a localized level at short notice. And I think the real advice for investors, for your viewers this morning, is that it is that flexibility of economies to deal with temporary restrictions, and sectors that have adapted have shown experience over the last 12, 18 months of working, of operating within that environment, that's going to ultimately be the determinant of the medium-term growth performance of a lot of these countries. Those that have adapted well, found systems, are going to outperform. Those that, for a number of reasons, either infrastructure-wise, investment-wise, the public sector funding side, are unable to respond as quickly. I think that is as relevant, actually, as the vaccine rollout on their growth profile.
Wonderful, Simon. Thanks so much. Simon French there from Panmure Gordon stays with us. We'll talk a lot more about the UK. We'll talk about inflation and the FOMC minutes. In the meantime, we're also getting some breaking news at the top of the hour. This is a very important conversation that we'll have with the Norwegian Sovereign Wealth Fund chief executive. It returned $111 billion in the first half of the year. So we'll have plenty more, of course, on that. We'll look at some of the strategies that worked, some of the ones that worked less for them. But overall, it does seem like it's a pretty good quarter to the year, and that means that they have a first half that's pretty impressive. Later today, we're also speaking with the head of Norway's Sovereign Wealth Fund, Nicolai Tangen. That's at 12:30 p.m. London time. Coming up, though, attention turns to the Federal Reserve minutes as Boston Fed Governor Rosengren says he would support tapering from next month. This is Bloomberg.
What seems to be a really tough situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Simone Foxman. Hi, Simone.
Hi, Francine. South Korea wants to have 70% of its population vaccinated by the end of September, boosting rates that lag others in the region. In an exclusive interview with Bloomberg, Prime Minister Kim Boo-kyum says his government will continue aid to small businesses hurt by strict social distancing measures aimed at stemming a record COVID wave powered by the Delta variant.
One of the reasons why we think South Korea has succeeded in prevention is because we didn't turn to extreme measures like lockdowns.
Local officials in Haiti have raised the death toll from a magnitude 7.2 earthquake that struck the country over the weekend to more than 1,900. Rescue work has been hampered by heavy rains brought by Tropical Storm Grace. The U.S. National Hurricane Center said some places in Haiti have been hit by as much as 38 centimeters of rainfall. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Simone, thank you so much. Now, the Boston Fed President, Eric Rosengren, says he would support tapering asset purchases from next month. He said that the emergency bond buying program is ill-suited for an economy held back by supply constraints. These words come ahead of today's release of minutes from the Federal Reserve's latest meeting and, of course, the Jackson Hole Conference next week. Well, Simon Frank from Panmure Gordon is still with us. Simon, were you a little bit disappointed that we didn't get, much from Jay Powell yesterday, or was he never going to front-run Jackson Hole?
I think you've answered your own question, Francine. I don't think he was going to front-run Jackson Hole. And I don't think he's actually got the critical mass on the FOMC, despite Rosengren's comments, for a aggressive move at Jackson Hole. I think while the most recent jobs report was encouraging, I think the overall trajectory of the Delta variant in the United States, the overall picture regarding the flexible average inflation target and where expectations are means that I think the FOMC are going to wait until their December meeting. And Jackson Hole, dare I say, it will be framing for the framing. It will set the intellectual backdrop of where they are on the flexible average inflation target, probably offer a few nuggets to the market on how their definition of maximum employment has evolved over the last 12 months. But actually, I don't see the communications fundamentally shifting until December.
I mean, Simon, it's very clear that Minneapolis's Neil Kashkari, is very cautious about the future, and he said again that there will be broader economic implications about the Delta for the U.S. I mean, is that your view as well? How early can we actually seriously think about Fed tapering?
Well, Neil Kashkari is the perma-dove on the FOMC. I don't think his comments should come as any great surprise. That doesn't mean that I don't have quite a lot of sympathy with him. I think he has been proved right during his tenure on the FOMC on a number of occasions, and I think his warning is well made. I think the points that I would make in terms of tapering, it's not clear to me across the whole envelope of asset purchases, the 120 billion, that the ongoing purchases of mortgage-backed securities are justified given where long rates are in the mortgage market. Does the Federal Reserve feel that continuing to add to their stock of purchases is providing financing, accommodative financing conditions to the real estate market that otherwise wouldn't be there? I'm far from convinced that is the case, and therefore there is possibly a halfway house here, which is the mortgage-backed securities element of the 120 billion envelope tapers somewhat earlier than the Treasury's purchases.
Simon, what's your take on the UK inflation reading today?
Yeah, so to be expected that inflation in the near term is going to pull back. There's a lot of lumpy data, not just in the UK, but globally in the inflation year-on-year comparisons. July was quite strong in 2020 amidst what was a weak inflationary picture. I think what we'll see is a really strong rebound in UK inflation in the August print in a month's time, because what was known as the Eat Out to Help Out scheme here in the UK, which suppressed the costs of eating out hospitality because of a government subsidy, that's going to come into the August data, meaning we'll go back from about 2% up to near enough 3% and stay high, I think, for a couple of quarters before it starts to come back on a more sustainable basis at the end of Q1 2022.
I mean, will there be limits actually to what, if there are limits to what central banks can do, and there must be, of course, are the markets going to feel it? Are you expecting some kind of catalytic correction?
Well, I think Danny at the top of the hour was talking about the VVIX and investors taking protection into some potential volatility as that communications message that we spoke about, that's not just relevant to the Fed but to all central banks. There's a potential for a policy mistake, perhaps not a material policy mistake, perhaps a communications policy mistake, which is of course part of the toolkit. And I think that is one of the reasons why we've seen volumes in markets across all capital markets reduced down, because it was such a strong H1 that a lot of fund managers, portfolio managers, are actually taking insurance through what are going to be thin volumes for the next few weeks during the summer break, but then also into the fourth quarter, trying to preserve some of those really strong gains. So I think that is both the seasonal effect and also the risk of bungled communications is one of the reasons there's a more cautious standing at the moment.
Simon, thank you so much. Simon French, their chief economist at Panmure Gordon, joining us this morning. Now, as the Taliban leadership in exile returns to Afghanistan, European leaders express frustration at President Biden's decision to pull out U.S. troops out of the country. Up next, we speak to the deputy chair of the CDU parliamentary group. That's coming up next, and then we look at a full roundup, of course, of the markets. Today, we're expecting FOMC, and then the focus will be on inflation. This is Bloomberg.
Never in your wildest dreams think Moderna would change the world in the way that it has.
The ability for this technology to be used overnight to fight against this very nasty virus, and that we did not imagine.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Taliban leadership in exile returns to Afghanistan. The White House says it's in contact with the militant group to allow safe passage through the airport. COVID cases rise in lockdown Australia and New Zealand. The RBNZ holds steady on rates, worried about the impact of the outbreak. Attention turns to today's Fed Minutes. Plus, wildfires rage through France and Spain. More than 10,000 people are evacuated from the Saint-Tropez region. What role can finance actually play in mitigating the climate crisis? Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Wednesday, 18th of August. Now, U.S. stocks actually posting their biggest decline in a month amid growth and virus concerns after a positive session through much of Asia. European equities and U.S. futures are searching for direction. Attention turns to Jackson Hole Symposium next week, which may offer clues on when and how the central bank will taper bond purchases. Let's get straight to our top story with our Danny Berger. Danny, first of all, what are you seeing on the markets? I mean, it feels like it's, markets are a little bit directionless, trying to look at inflation. They're trying to figure out what, the Delta variant means for growth yet again.
Yeah, exactly. I mean, look, there are just so many risks in this market. And we were talking about earlier how it's the summer months. And so that gives us the opportunity for volatility to move higher. So because of that, it's a really just, as you say, directionless market. But if anything, the bias is towards one of being more somber. We're continuing to see U.S. futures drop after that session yesterday of falling 0.7%, the biggest fall in a month. Europe not doing all that much better, too. So underneath the surface of these moves, we continue to see investors going towards haven, gold being one of them, up about 0.1%. Also really remarkable, Francine, Palantir, the tech company, the big data company, buying $51 million worth of gold, saying that they are preparing for a black swan event. So that gives you an idea of how some corporations and market participants are viewing the state of play right now, not to mention things like Afghanistan and geopolitical concerns as well. And we do have a VIX that is moving higher yet again, Francine, volatility about the highest in 2 weeks.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on some of these markets. Now, European leaders have expressed their frustrations at President Biden's decision to pull out the remaining U.S. troops from Afghanistan. The German Chancellor Angela Merkel also says the NATO mission there was fundamentally dependent on the Americans. France's Emmanuel Macron stressed the Taliban took Kabul in a matter of hours with no resistance. Now, the White House is still insisting that they did not foresee Afghanistan falling so quickly to the Taliban.
We were clear-eyed going in when we made this decision that it was possible that the Taliban would end up in control of Afghanistan. We were clear-eyed about that. Now, as the president said in his remarks yesterday, we did not anticipate that it would happen at this speed, though we were planning for these potential contingencies.
Well, joining us now is Johan Wadepoel. He is the deputy chair of the CDU-CSU parliamentary group. Mr. Wadepoel, thank you so much for joining us here on Bloomberg Surveillance. What is the one thing that actually Europe and maybe some NATO allies can do now to help Afghanistan?
Yes, we're trying to get our personnel out of Afghanistan. Of course, first of all, the German ones, the NATO personnel, and of course the people from Afghanistan who helped us providing the military actions within Afghanistan. And of course, it was surprising for us that Kabul fell so quickly into the Taliban hands. But this, of course, was the result of a development which began in spring when the U.S. administration, when President Biden decided to leave the country without any conditions. And when then the intelligence informations from the United States 1 or 2 weeks ago were released that the Taliban only need some 30 days to capture Kabul. Okay, that knocked out the army in Afghanistan that brought the will of Afghans down to fight against the Taliban.
Mr. Vadapul, can you clarify what you're expecting to address in today's extraordinary committee meetings?
We would like in these days, we try to save as much lives as possible, and we're trying to work together with the United States as closely as ever possible, as we did in the last 20 years. So there are a lot of expectations on Germany if it comes to questions of defense. We have to spend 2% of the GDP and so on. This is all absolutely correct, but in my eyes, in the last time, the United States did not see that Germany stood with the second largest troop contingent together with the United States in Afghanistan, that we worked closely together with the US, and nobody asked us whether it was a good idea to leave that country in such a quick way. So the very irritating situation we do now have, the chaos we are facing in Kabul, is of course the result of this. Germany was ready to stay there for a little bit longer, for perhaps 2-3 years, but unfortunately there was no political will in Washington to do so.
So what should we actually learn? What should Germany learn from this chaos in Afghanistan? Are you questioning the communication between NATO members?
I'm questioning the decision in principle. Whether it hadn't been more intelligent to negotiate a little bit longer in Doha and keeping military pressure on the Taliban in Afghanistan. And of course, I'm questioning the communication. Nobody told us that we all together, of course, if the US leaves, we also have to leave, that we had to leave in September. Then it was 2 months earlier. We had to leave at the beginning of July. So there was no reliance on the timetable. And so if the alliance is not clear, if we were not clear to say under which conditions and in which time we would leave Afghanistan, the trust on the other side in the Afghan army also fell down.
Mr. Vadapul, many people are asking what the role of Germany will be in foreign relations in the future. Does Afghanistan, maybe mark a turning point of Germany being more at the forefront of foreign affairs, also, taking on allies, but being a leader in this?
Yes, of course. We will have to rethink all of this. We are engaged in Africa, in the Sahel zone, in Mali and in other neighboring countries. We're taking responsibility there together with France, especially, and other European partners. And of course, it's absolutely clear that Germany has to do more in questions of foreign affairs and foreign security questions in our neighborhood. It's absolutely clear that we have to acknowledge that the United States will no longer be the policeman of the world and help us to live here secure in Europe. We have to do more. But may I remind you that this is a long path for Germany, which has been educated since the Second World War to abstain from using military power.
Johan, thank you so much for joining us. Mr. Johan Vadapul there, Deputy Chair of the CDU-CSU Parliamentary Group, joining us this morning. Now, in the meantime, the UK House of Commons are now debating Afghanistan. It's the first time Parliament's been open since restrictions have actually been lifted. Parliament has been recalled. The Prime Minister is about to open a debate in the House of Commons about the situation in Afghanistan. Here's the Prime Minister.
Thanking you and all the parliamentary staff for enabling us to meet this morning. Before I turn to today's debate, I'm sure the House will want to join you, Mr. Speaker, and me in sending our condolences to the family and friends of those killed in the appalling shooting in Plymouth last week. Investigations are, of course, continuing, but we will learn every possible lesson from this tragedy. Mr. Speaker, I know that members across the House share my concern about the situation in Afghanistan, the issues it raises for our own security, and the fears of many remaining in that country, especially women and children. The sacrifice in Afghanistan is seared into our national consciousness, with 150,000 people serving there from across the length and breadth of the United Kingdom, including a number of members on all sides of the House whose voices will be particularly important today. And so it's absolutely right that we should come together for this debate. And Mr. Speaker, yes, I will certainly give way to my right honourable friend.
I thank the Prime Minister for giving way. As someone who opposed this nation-building intervention, it now brings its responsibilities. In addition to getting our nationals out safely.
Live pictures there from Westminster, the House of Commons, where Parliament has been recalled, and we just heard there from the Prime Minister talking about Afghanistan. We know that Mr. Johnson spoke to the U.S. President Joe Biden yesterday evening about the evacuation of Kabul. We'll have plenty more, of course, on Afghanistan. We're also just getting some breaking news out of Tencent. If you look at sales, they rose to around 138 billion yuan. I have to say the results are out. Revenue seems to be in line with estimates, judging at least from the first couple of headlines. So we'll have plenty more on the Tencent second quarter revenue. Again, this is a story of crackdown and regulation in China. Coming up, extreme weather events create more urgency in tackling the climate crisis. The role of sustainable finance in challenging the climate crisis is up next. This is Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could tank the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, firefighters are struggling to contain wildfires in France's Gulf of Saint-Tropez and the Spanish province of Avila. More than 10,000 people have been evacuated in southern France, and the blaze in Spain has so far consumed at least 15,000 hectares of forest. After last week's damning report from the IPCC, attention has turned more than ever to solutions rather than the causes of climate change. While sustainable finance could be the driving force behind many of the solutions, and Mirova, an affiliate of Natixis with more than £20 billion under management, specializes in the sector. Well, we're joined by Philippe Zawati, the chief executive of Mirova, who joins us now. Philippe, thank you so much for joining us. You've dedicated the last decade of your career investing in sustainability. You also contributed to the writing of Emmanuel Macron's presidential program on the environment and wrote several books, including Sustainable Finance, Ringing in a Second Chance. What role can finance today play?
A huge role, a very important role, because I mean, not only finance, but we need to completely transform the economy. The result that we are seeing today is a result of the economy of the past, and today finance can be a very huge lever to change the way we are producing and consuming goods. We need to invest a lot if we want to transform the economy and to go to carbon neutrality in the coming decades. That means huge investments in new technology, in renewable energy, in, of course, clean transportation, in the transformation of the agriculture as well. All this needs a lot of financing, but we also need to change, also to transform the players of the old economy, I would say, of the carbon-intensive economy, and that will need also a lot of investments to transform this carbon-intensive economy. And so this is, of course, something at the public level and at the private level as well.
But Philippe, is there a danger that actually going through finance, the money doesn't actually really change habits, so that we're still financing, for example, fossil fuels at the margins? So what are the limits of finance, and how do you think it will change in the next 12 months?
There are a lot of different levers, and the first one, of course, is regulation. What we have seen in Europe the last couple of years is a very strong evolution of the regulation, and the will to create at the European level a green market union is something very important. It started a couple of years ago with the Sustainable Finance Action Plan of the EU, and especially with the creation of the taxonomy. So this taxonomy is a kind of a grammar of sustainable finance. It defines what is green and what is not green, and it will help investors to channel the money into the green economy. Yeah. With also creation of labels and standards, to help the savers to direct their savings into that direction.
So if you look at the possibility, Philippe, if you look at the possibility of a green capital markets union, I mean, yeah. What does that need to be incorporated in the capital markets union? Is that something that actually, regulators and authorities in Europe are really thinking about?
What's interesting is that 5 years ago, I was speaking about the capital market unions, and there was nothing about sustainability in the CMU project. It was only about, intensifying the financing of the European economy, but nothing about sustainability. And today, that's exactly the other way around. We start with the Green Deal, with how shall we finance the Green Deal, how shall we finance the, let's say, for example, the hydrogen business and so on and so forth, and how the CMU and the Capital Market Union could help to do this. So the hierarchy of the thinking at the European level, at the European Union level, has completely changed, and it's the other way around that 5 years ago.
Philippe, how do you think the financing actually will change? Philippe, how do you think the financing will change in some of these markets? Is money going to be? It's gone into a lot of ESG bonds and green financing. Is there going to be a more sophisticated level to make sure? Yes, to make sure that we don't do greenwashing.
Yeah. The greenwashing question is very important, of course, but let's look at the new regulation, which is called the SFDR, which defined in this Article 8 and Article 9 the product which are sustainable, the responsible investment products. And so all the investment funds in the EU had to declare within, whether they are in this category or not. And 1/3 of the investment funds has decided to put themselves in this category, in this responsible investments category. So we can say that 1/3 today of the investment funds managed in Europe at least incorporate environmental and social and governance criteria into their management. So that's a very important point. That means that all the industry is completely changing. But of course, within this third of investment funds, there are different things, and greenwashing is of course a thing very important to tackle. But all the transparency, regulation requirements, which are today put in place by the European Commission, are clearly going into the good direction.
I mean, you have so much under, assets under management. Where is the most appetite for green financing coming from? Is there a part of the world? Is it Europe? Is it European investors? Is it the US? Is it Asia?
It's of course it was mainly Europe, but we have also started to develop our business in the US 5 years ago, and today the momentum is very strong in the US as well, and we see Asia starting. Of course, it's emerging in Asia. But today, yes, and the other interesting thing is that a couple of years ago, most of the demand was coming from big institutional investors, insurance companies, pension funds, and so on. And today, in the last couple of years, we have seen a very strong growth on the retail side, and especially on private banking side. And a big part of our assets are coming from high net worth private investors today.
Wonderful. Thank you so much for joining us this morning for a really interesting and important conversation. Philippe Zawati, there, the Chief Executive of Mirova. Now, the pass rate for the Chartered Financial Analyst Level 1 exam has hit the lowest since testing began in 1963. Only 25% of applicants actually passed the latest test, down from the average rate of 42%. Now, passing all three CFA exams can lead to higher salaries, but also better job opportunities. Candidates, on average, study 300 hours for each level and take 4 years to complete the series. Some are now wondering if it's worth the time. Well, one of them is Daily Dirt Nap editor Jared Dillian, writing for Bloomberg Opinion. He argues that the CFA program is actually a colossal waste of time. You can read his piece in full on OPNI Go on the Bloomberg, and of course on Bloomberg.com. Well, joining us now is our Markets Live editor and recent CFA candidate, Eddie. First of all, I mean, 300. I congratulate you, because you're one of the 25% that actually passed, but also you studied for it 300 hours, and I'm sorry to have to remind you. I mean, I don't know if you enjoyed it, but certainly you found it valuable.
Absolutely, I have. Look, I found that a really insightful piece. I'll say that first of all. I have a lot of respect for Jared, and I think he struck some really interesting points about the scope of the CFA exams. One thing he's definitely right about is it takes a lot of time, right? You say 300 hours for the level 3. I certainly studied an awful lot more than that. But somebody who's a little bit smarter may not have needed to study quite as much for the exam. But certainly, you need to cover a lot of material in order to get through this exam. And it's important to know what the CFA is and what it isn't, right? It doesn't really prepare you. If a candidate goes in thinking they're going to be a senior hedge fund manager coming out of it, I'm sorry, but you're just not. This is an entry-level exam. There's a lot more that you need to do to prove yourself in today's finance world, but it's a good start.
All right, on to the markets. I mean, it is one of our most read stories, actually, and I urge everyone to go and have a look, because it's interesting for those who passed the CFA and those that didn't. Eddie, what's on your mind in terms of markets? I imagine minutes and inflation.
Yeah, minutes and inflation, you're absolutely right. I think, the markets are a little bit stable today. We've had a little bit of a pullback in Europe in recent sessions after this phenomenal run up. It's seemingly markets are more and more disconnected from fundamentals, which the CFA candidates will be a little bit frustrated by. But look, I think it's interesting to see just where markets are going as we see the minutes today. But I think the really big one is going to be Jackson Hole at the end of the month.
Yeah, what are you expecting from Jackson Hole? Is there a worry that actually we're not going to hurt? I mean, I know that it was very unlikely that actually Jay Powell would have front-run Jackson Hole with an important speech on tapering yesterday. But what if we don't get much in Jackson Hole either?
Jackson Hole is really important, not not just because of who is speaking, but also because who is watching and what people expect from it. People go into Jackson Hole thinking this is going to be the policy setting, agenda setting, moment of the year, and therefore everything that anybody says just carries that much more weight, and there's scope for surprises there. I think we're waiting to see whether there is a rebalance between worries about inflation and worries about the Delta variants and growth and so on. And I think Jackson Hole, the absolute perfect opportunity for central bankers to give us more of a view on that.
What about, is there anything else, Eddie, that you're looking at? I know there was a couple of stories on the VIX, or I don't know whether you're looking at gold.
Yeah. Look, the VIX is really interesting. I think for me, my eyes are still very much on crude prices. Crude prices have come back a lot. Crude prices, of course, and commodity prices generally, important in driving inflation. And I think we may just go into Jackson Hole with inflationary pressures coming off a little bit because commodity prices are softening. And that's because China is slowing, and that's because we in the West are pivoting towards a services rather than a pure growth based on goods. So I think that's really interesting as we go towards the end of the month.
All right, thanks so much. Our Markets Live editor and recent CFA candidate, again, congratulations, our Eddie van der Walt. In the meantime, we're looking at the UK House of Commons, where members have been recalled and are now debating Afghanistan. This is the first time Parliament's been open since restrictions have actually been lifted. They had to be recalled for their summer recess. Boris Johnson addressing their Parliament, promising that up to 5,000 Afghans can actually find refuge in the UK this year, with up to 20,000 in the longer term. A lot of questions, of course, will also be asked on communication between the U.S. and some of their main NATO allies. We had an interesting conversation with the CDU member just a short while ago, saying maybe it will also lead Germany to take a more active role in foreign policy. I wonder whether it will be the same for the UK. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Katie Lyons out of New York. We'll have a full roundup of Afghanistan, the markets. We'll look at FOMC minutes a little bit later on. We'll also talk about China and Tencent. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance and more.
2022年完成空间站的在轨建造，建成国家太空间之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
As far as the dialogue and the consultation is happening, I think it's a little bit disingenuous of the U.S. administration right now to say they had nothing to do with this, because they, in fact, were the ones who facilitated the Taliban's return.
We were clear-eyed going in when we made this decision that it was possible that the Taliban would end up in control of Afghanistan. We were clear-eyed about that.
NATO's focus right now is to ensure the safe departure of personnel from allied and partner countries and of the Afghans who have helped us.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, August 18th. Our top stories today. Safe passage. The U.S. says it has to deal with the Taliban to allow Americans to get to Kabul airport so they can evacuate. Retail therapy, Target and Lowe's report earnings today after a mixed bag of results from Walmart and Home Depot. And Wall Street tightens up while the coronavirus surge is prompting Goldman Sachs to consider a mask mandate at work. Meanwhile, Morgan Stanley will now require workers to show proof that they're vaccinated. Now, if you look at the markets, they're kind of trading sideways, Kaylee. So although they may be preparing for some kind of option expiration, maybe they're looking at virus resurgence, or it's just a quirky August day, a little bit directionless in today's trading session.
Yeah, or we're all just waiting and watching for Jackson Hole that will be taking place in just over a week, Francine. I will say it was a little bit more decisive in the Asian session in that it actually was positive. Green really all across the screen, from Korea to Japan to China and Hong Kong. A difference from what we've seen in the past couple of days. Actually, the MSCI Asia Pacific Index rose by a few tenths of 1%, its first day higher after a 4-day losing streak. So maybe a little bit of dip buying coming in Asia. Of course, one individual stock in Asia we've been paying attention to is Tencent. It ended the day 0.3% higher, but that was before it released results after the market closed in Asia. It did show a slowdown in gaming growth, so we'll have to see how that stock reacts in tomorrow's session. It's already down more than 40% from its peak earlier on this year. Of course, the other news out of the region overnight was from New Zealand. The central bank out with a surprise rate hold. It was expected to hike, but the lockdown, because of a resurgence in coronavirus cases, and by that I mean exactly 7 cases, threw a little bit of a wrench into that plan, though the central bank says they still plan to tighten eventually. So that has whipsawed the New Zealand dollar. Right now, it is stronger against the U.S. dollar, or weaker, excuse me, by about a tenth of 1%. As for the picture here in the U.S., it has been, as Francine says, a little bit directionless this morning, fluctuating between gains and losses. Right now, we are in negative territory, down by about a tenth of 1% on S&P 500 futures after the index fell from a record high yesterday. In the bond market, not a lot of movement. We're essentially unchanged on the U.S. 10-year yield, sitting right around 126. It is a weaker dollar story broadly in the G10 space today, and that may be a bit helping oil. It, of course, is fresh off its worst losing streak since March, down 4 days in a row, but this morning, WTI futures up about 0.6%, Matt.
All right, we have a pretty mixed picture in terms of what's going on here in Europe, Kaylee. Take a look at the map, and you'll see a lot of gray, some green on the screen, a little bit of red there. So sort of struggling for direction, but I guess moving a bit to the downside. If you take a look at the broader stocks 600, you can see that it's moving a little bit lower right now, even though you have gains in Switzerland, even though you have gains in Austria. You can also take a look at the Bund's negative 48 basis points, and we're looking at the pound as well. The pound gaining against the dollar, but still below $1.38 at 137.57. And I like to show Brent crude because it is the global benchmark, creeping back up towards $70 a barrel. So right now it's 69.56, but it does look like, Francine, these markets are looking for some direction, looking for some catalyst to move in one way or the other.
Yeah, they are, Matt. You know what also caught my attention is actually the VIX. Volatility could be, I know it's from a low base, but something that maybe we should keep an eye on.
Yeah, absolutely. And gold, I think, is interesting. You know, there's a great story overnight about Palantir. They bought apparently $50 million worth of gold bars. I always love the idea of these 100-ounce gold bars going for $178,000 a piece. And they're now willing to accept pay, not only in Bitcoin as well as dollars, but in gold for their software services. Yeah, exactly. So if you need some software action from Palantir, you can just get a gold bar and hand it over to them, and they'll deliver.
Perfect for the Miller Vault. Let's also look at what's ahead today. The EIA releases its crude oil inventory report at 10:30 a.m. New York time. 2 p.m. we'll get the minutes from the FOMC's latest meeting. Dallas Fed President Robert Kaplan and St. Louis Fed President James Bullard also speak today. And finally, more retail earnings with Lowe's, Target, and TGX due a little bit later. Now over to Afghanistan, and the Taliban have told U.S. diplomats that they will allow for safe passage to the airport in Kabul. The White House is now urging Americans in the besieged city to head there for transport out of Afghanistan. National Security Advisor Jake Sullivan spoke at a briefing yesterday.
We are engaging diplomatically at the same time with allies in regional countries and with the United Nations to address the situation in Afghanistan. We are in contact with the Taliban to ensure the safe passage of people to the airport.
Let's go straight to Anne-Marie Hordern, who was in that briefing, our Bloomberg Washington correspondent, joining us from D.C. Anne-Marie, is there a trust at all from D.C. that they can actually take what the Taliban are saying at face value?
It's a very good question, Francine. The track record and the history of the Taliban certainly does not support that they could potentially take what the Taliban is saying at face value. And while you do have the United States saying that they are in contact, and at the moment we do see personnel, more than 3,000 people have been able to be evacuated from the United States side, as well as some 2,000 Afghan immigrants wanting to come to the United States. There is reports the Taliban is also setting up security checkpoints around the airports. That's something that we're going to have to be watching every single day as this unfolds. The President of the United States, we should mention, has come under immense pressure for what unfolded over the weekend. He is actually back at the White House now. He was at Camp David. And yesterday we tried to get a sense from the National Security Advisor Jake Sullivan about what actually unfolded, the timeline of this. And when I asked them about this, Mr. Sullivan said that on Thursday, the President of the United States did, in fact, give the order for more troops, given the deteriorating situation on the ground. So I followed up with, if he knew on Thursday about this situation, why did he leave the White House on Friday? Take a listen.
He was monitoring developments hour by hour throughout that entire time and has been making a series of decisions about troop deployments, giving us direction and guidance about how to take the shape of this mission and make sure that we're executing it. And at every turn, asking our military, who is leading this mission and executing this mission with bravery and valor, what do you need? I will get you anything you need. He asked that question multiple times every single day.
Another major point to bring up out of that briefing is that August 31st deadline. National Security Advisor Jake Sullivan was questioned about what happens if not all personnel is evacuated in time, and they say they are just taking it day by day and focusing on the task at hand.
Well, I'm glad you brought that up, Anne-Marie, because of course we saw a letter from more than 40 members of the House on both sides of the political spectrum saying you need to make sure we get all of our troops and our Afghan allies out of there before we leave. So is that August 31st deadline very much in flux at the moment?
It's certainly in focus. Unsure if it's in flux. The National Security Advisor would not say whether or not it's going to be extended or not. He didn't want to get into hypotheticals. And him and the press secretary, Jen Psaki, also said that they are just focused on the task at hand. It would be incredible, though, if the United States still had people there and decided because of a deadline, a date, they were not going to get them out. But I imagine this is something throughout the next coming days and weeks that is going to be a ton of attention and focus on.
All right, Anne-Marie, thanks very much. Anne-Marie Horton there out of Washington, D.C. Let's get to Wall Street now. Banks revising the rules again for returning to offices. At Goldman Sachs, talk center around asking staff to wear masks at work. Morgan Stanley just informed the staff they must provide proof of vaccinations. The honor system no longer flies. Let's get more on this with Bloomberg's Danny Berger. Danny?
Matt, well, the issue at hand for these banks, a lot of them were very bullish in getting their employees back to the office. Goldman Sachs, JP Morgan, for example, both of them were really early on this trend. But confronting the new reality of Delta means that if they're back in the office, you need to make some changes to make sure your staff isn't catching COVID. Now, a lot of this is very common sense. Like you said, Goldman Sachs mulling the idea of having their employees wear masks again, doing spot checks for positive COVID tests. Morgan Stanley, their proof of vaccination, so they haven't asked staff to fully come back in yet. But earlier in the month, you'll recall, they did have 2 staff members who tested positive for COVID, despite the fact that they were fully vaccinated. So again, it might be this sort of liability question, as if you have people in, you need to be taking these steps to prevent the spread of Delta variant.
Well, and of course, Danny, these banks operate where you are in London as well. And in that area of the world, it's basically just the regulations and the restrictions around masks and vaccines are unchanged from what they already were, right?
That certainly is part of it. But Kaylee, I will say that we had, so-called Freedom Day here in the UK. Whether it was that or not means that some of those mask mandates have been lifted. But I think it's maybe more of a cultural thing that there's more hybrid working here. Certainly in these banks' offices in London, you can still see people wearing masks. So they haven't yet changed here in the UK and really for most of Europe. So it really is Wall Street that's been taking the lead, but perhaps they acted a little too soon because those offices might start soon looking like the ones here in London.
Danny, thank you so much. Our Danny Berger there with the very latest on some of these staff moves. Now, tech giant Tencent reporting revenue today that met estimates. China's expanding tech crackdown, of course, overshadowing newer businesses like cloud and social ads. Well, joining us now from Hong Kong is Matthew Canterman, Bloomberg Intelligence tech analyst. Actually, Matthew, so it wasn't as bad as we were expecting, but still, year to date, down 43% in terms of value.
Yeah, I mean, the numbers were pretty much spot on with consensus, which I guess you could say is good considering the stock down so much. It was probably worse priced in than that, right? But the ad business was a bit weaker than expected. Some of the new businesses like fintech and business services were a bit stronger than expected. Gaming was down year on year, but that was largely expected because, even though Tencent has a large China gaming business, they have a global footprint. In the second quarter of last year was really the bulk of lockdowns in the West. And so the Western gaming business of them, is huge high base last year. All things considered, pretty much what we expected.
Is the pain for Tencent shares then over, Matt?
I don't think so. I think with the regulatory headwinds swirling, we're seeing more regulatory headlines. Literally the second the press release for earnings comes out, there's headlines from the MIT in China, saying they have to fix some apps for privacy issues. So, I think there's lots more in terms of the headwinds to come. And obviously, every time there's been a negative headline, the stock has fallen pretty sharply. So I would be reluctant to try to, call the bottom here and say it's time to buy the dip. I think that, if you have a long-term horizon, this is a structurally sound business. They're going to protect a pretty much monopoly in several sectors. It's just the growth of that business longer term and the cost structure are going to be worse than what we thought.
All right, Matthew Canterman of Bloomberg Intelligence, thank you so much. And speaking of stocks and the way they are moving, let's take a look at some U.S. shares and how they're trading in pre-market trading here in the U.S. I wanted to point out vaccine makers because, of course, Moderna last week was under some pretty intense pressure. Then yesterday we got reports that the U.S. is ready to outline guidelines for those third booster shots. That lifted Moderna more than 7% yesterday, and those gains are continuing this morning, up about 1.3% before the bell. Another stock moving to the upside is Tilray, of course, the cannabis company. It announced overnight that it has acquired a majority position in convertible notes in MedMen when they are able to convert those notes into equity after the passage of U.S. marijuana legislation. That could provide a big boon for the company, and the stock is up 6.7% as a result. And finally, one more mover to the upside is 23andMe. It was up 13% yesterday after getting a buy rating over at Credit Suisse, and investors are continuing to bid up those shares in early hours, up about 4.25% before the bell, Francine.
Yeah, there you go. 23andMe. I once gave away my DNA. It's a story for another time, but actually they're doing some fantastic work in terms of genetics. Coming up, Max Kettner, HSBC multi-asset strategist, and then a little bit later we'll also be speaking to Ed Clissold, Ned Davis Research Chief U.S. Strategist. That's all about Jay Powell and inflation. This is Bloomberg.
Has been looking at West Palm. They have been looking at outside of New York for offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we really preach the mantra of flexibility. I think we've proven throughout COVID that we can be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history through a flexible work environment. So as we head back for the fall, we've really preached to all of our businesses to lean in and embrace this flexibility and go where the market goes. We're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Joining us now is Max Kettner, multi-asset strategist at HSBC, also coming from somewhere in the Federal Republic of Germany. Max, let me ask you about these markets and the fear of COVID. Is it creeping back in? Is that, you think, the reason for the recent downturn?
Well, it is a little bit, but I think people are making their lives a little bit too easy if they just focus on the Delta variant. So that's what we're hearing a lot right now. Had it not been for the Delta variant, we wouldn't have needed to revise our forecast slower. Well, actually, if we look at most of our global growth models, actually growth momentum has been rolling over since May already. So it's not just due to the Delta variant. It's been going on since the middle of Q2 already, that growth momentum has been incrementally lost. Now, Delta is adding another further complication to it. And that, when we look at, let's say, for example, the extent of global growth forecast revisions over the last couple, let's say 3 to 6 months, they've been basically at a post-financial crisis high. That is really at risk, and that puts some of the early cyclical trades really at risk, and that's why we're still saying, look, you've got to stay with growth, with quality, with carry assets, but it's too soon really to go back into sort of reopening and early cyclical trades.
But so, Max, what's the one thing, if you look at inflation, right, what's the one thing that could actually scupper that?
Well, I think on inflation, it's pretty clear that when we look at the last print that, the transitory nature is increasingly coming through. And I think one thing that is underestimated is how there is actually a pretty positive correlation between inflation surprises and actual inflation prints, meaning that, when there's very positive base effects like we've had in the first half of the year, economists tend to have a pretty tricky time to factor them in appropriately, and they keep being surprised on the upside. But conversely, they also have a pretty tricky time to really factor in the unwinding of those base effects, what we're going to see probably the next 6 to 12 months, which means actually there could be a bit of downside surprises in inflation, which really no one is expecting at the moment.
So, Max, it's hard for economists to forecast what inflation is going to do. It's also hard for strategists to forecast what we're going to see in the bond market. Bank of America yesterday putting out a research note saying they see a 100 basis point range for where the 10-year could be at year-end, between below 1% and up to 2%. Can you make any kind of call with conviction on treasuries right now?
Yeah, I mean, our rates guys are still calling for 1% by the end of the year, and we are still overweight, actually very much so, in our allocation and duration through being overweight in investment-grade credit, in treasuries outright, in emerging market hard currency debt with a duration of around 9. So we actually did like and still do like duration quite a lot. First, because it continues
Max,
to be the pain trade.
What if the taper kicks off, Max?
Yeah, I guess tapering is a little bit overblown. I mean, there's too much really being factored in, I think, for the rates call. I think what is more at risk is perhaps some of the risk assets, so equities, perhaps a little bit credit. I think what's really at risk, if the Fed does taper too aggressively, if also the pace, not only of the announcement, but also the pace of tapering is better than in 2014 or faster than in 2014, then it's going to be a bit tricky for US equities in particular.
It feels like we're on a threshold of a major bifurcation of scenarios for markets.
Oh, bifurcation has been called.
Yeah, there is. I think the bifurcation. I mean, that's sort of the call for regime changes, right? Which I think we haven't been short of those calls for the last 12 months. I'm not particularly sure. I mean, first, with the inflation, for example, that very much comes down now. That very much we see that sort of transitory nature coming through. We shouldn't forget that most of those supply side bottlenecks are hugely transitory in nature, right? We cannot call that things like, let's say, Taiwan having the worst drought in 60 years and that hugely impacting the chip shortage, right? That is something that is lasting, that's going to call a regime change. I'm not particularly sure, right? Yeah. There's an awful lot of stories being made out of that, but a bifurcation or regime change, I'm not a particularly great fan for that. The reality is what we should really be focusing on is the broader growth and the broader liquidity picture. Because let's face it, since the beginning of 2019, we've had more and more liquidity. That's going to change next year.
Max, thank you so much. I think everything was set off in terms of bifurcation because of a Bank of America rate strategist call, which said treasuries could go at 1% or at 2%. Max Kettner, multi-asset strategist there at HSBC. We'll have plenty more on the markets and on treasuries. This is Bloomberg.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. and that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
This is Venezuela, a country that has suffered one of the greatest economic and humanitarian crises in modern history. Today, it appears Nicolás Maduro and his government are prepared to negotiate an agreement that might end U.S. sanctions and pave the way for free and fair elections.
Hopefully, we can find paths of closeness, of respect.
Join Bloomberg Television for a special report, Inside Venezuela, Friday at 7.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And the U.S. is trying to keep the Taliban from accessing assets belonging to Afghanistan's central bank. The Biden administration has frozen almost $9.5 billion in Afghan accounts. The Taliban remains on the Treasury Department's sanctions list. Meanwhile, British Prime Minister Boris Johnson is rejecting calls for a formal inquiry on Afghanistan. He says the Taliban took over the country even faster than they expected. Johnson also said it would have been impossible for British troops to stay in Afghanistan without an American military presence. In Florida, more school districts are squaring off against Governor Ron DeSantis. The schools are considering whether to defy the governor's ban on mask mandates. Thousands of students are being isolated at home because of a new surge in coronavirus cases. And Texas Governor Greg Abbott has been using executive orders and court rulings to fight mask mandates and other anti-pandemic measures. Now he is isolating in the governor's mansion after testing positive for a breakthrough case of the coronavirus. Abbott is fully vaccinated. He is receiving monoclonal antibody treatment. And Francine, the contrast between places like Florida and Texas, where even masks are an issue of concern, and New Zealand, where a single COVID case sends the entire country into lockdown, it's very stark.
Yeah, it's stark, and actually I think they have similar vaccination levels. And we also saw, for example, in New Zealand, then the central bank saying actually they can't raise rates because 10 people have been infected. So it's actually amazing how different regions are going at it different ways. Now, coming up next, Ed Clissold, Ned Davies Research Chief U.S. Strategist. We talk Jackson Hole, we talk inflation. This is Bloomberg.
is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, and Kay Lines in New York. Matt, I know we're looking at volatility, and actually we're trying to figure out what direction the market will take. And they're looking at inflation, they're looking at COVID and what it means for growth. They've been looking at that for 10 months, so maybe it's just also a quiet August day.
Yeah, right, and waiting for something to come out of the Fed, right? Yesterday we heard Jerome Powell speak, but he didn't really say much. Also, taxes are key, but they're in recess right now, so we're not going to hear anything out of them for another week. So there really is a market right now that's looking for some direction. It could go up or it could go down. I guess that's the point of volatility, but it's not really going much of anywhere right now.
No, it's not. And so, Kaylee, how's it all playing out in the markets?
Well, at risk of sounding like a broken record, Francine, the market is looking for direction. We've seen some fluctuations in Europe. We are off the highs of the session. Really just not a lot of movement at all on the stock 600. It's only up literally less than 0.1% at this point. And here in the U.S., after being in positive territory earlier, S&P 500 futures are in now negative territory, down by about 0.1%. Not a lot of movement in the bond market either. We are essentially unchanged on the U.S. 10-year yield, sitting right around 126. You are getting a little bit more action in commodities, as you have really been for quite some time. 4-day losing streak on oil, the worst since March until today, trying to rebound. WTI up about 0.6%, just shy of $67 a barrel. And as for some stocks to watch in pre-market trading, I have in my eye on vaccine makers. Of course, the U.S. is looking at announcing guidelines on booster shots or a third shot for the likes of Moderna. That stock is up about 0.2%. You also have CureVac and Novavax higher as well. One stock moving to the downside, though, is Cree, of course, the semiconductor maker. It makes LED products. It reported it gave a second quarter revenue forecast that missed expectations. As a result, that stock down the better part of 5% before the bell, Matt.
All right, Kaylee, I want to welcome our listeners on London DAB Digital, as I do every day at this hour, because it's time for me to show a chart. And of course, they can't see it, but I'll walk you through it. This shows this chart, the 10-year yield, as we've seen moving over the past couple of years, down to a low of less than 0.5%, and then up to a high level for this year of about 1.8%. But the point, and it's noted in the headline, is that we're in a bifurcated market. We've been using this word a lot in this hour. Shout out to Manus Cranny and Anne-Marie Hordern. What it really means is you can see the yield go up, or you could see the yield go down, which is, I guess, what happens in these markets. The strategist at Bank America, Bruno Braitzina, wrote, the market seems to be sitting at the threshold of a major bifurcation of scenarios. And I want to ask Ed Clissold what he thinks those could be. He is Chief U.S. Strategist at Ned Davis Research, joining us now. Ed, where do you see the 10-year yield, and what are you driving it?
Yeah, so yeah, the 10-year is in the middle of a range. We went through a tantrum like we've seen several times in the last decade, where the 10-year goes up by over 100 basis points over a short period of time. And usually it moves in front of the big news event. That's what happened with the taper before, even the first rate hike in the last decade, and the tax hikes as well. So we've probably gone through a lot of the pricing in of the taper that's likely going to start next year. But from here, fair value is probably about 175. So we'll probably see a drift higher. So if you look at the chart that you just showed, Matt, we're more likely to go to the high end of the range or the low end of the range. Next move is probably to the upper end of the range.
Ed, the concern, I guess, sometimes on the markets is that actually when you have the wide range of Treasury calls, why are they so wide?
Well, it's been a conundrum for a long time. If you were to use fair valuation based on where inflation is, where other bond yields are, where economic growth is, it should be higher, and yet bond yields keep declining. I think there's a supply-demand balance here where there's demand for fixed income securities. There's lots of concern about valuations and equities that are driving this, and so I think a lot of fixed income strategists are probably throwing their hands in the air and wondering why all their models aren't working.
Right. I mean, what I would say, and actually I disagree with Matt Miller, we never disagree, but we disagree sometimes on bifurcation. It's not that it goes up or down. It's that certain people, 50% interpret it this way, and the others actually think that inflation is sticky. When will we be, kept honest? When do we actually find out who's right?
Yeah, the challenge on the inflation front is that we won't know for a long time. Everybody realizes that inflation numbers are going to be running higher for a little while because of base effects and some supply chain issues. The fears out there is if we go back to some 1970s type wage push inflation, but that's just going to take time. And the Fed has signaled they're willing to let this run for a while. So even if the inflation numbers get hot, it doesn't necessarily mean that long-term inflation expectations have to get out of control. And so that's a unique position for the market to be in.
So, Ed, how does this all boil down into an equity thesis? Where do you want to be positioned?
So here we are, well into the second year of an economic expansion in a bull market. The pace of gains usually slow. We get more corrections. So it's really a rotation from the early cycle plays into some more defensive plays, where maybe before you want to be so cyclical, now you want to have a better balance. We do think there's probably one more cyclical value reopening trade. Hopefully, if the Delta variant starts to calm down, we'll get that. But from there, it's more of a typical bull market. We like mid-cap stocks more than large or small. That's kind of an underappreciated part of the market. And then rotate into maybe some bond proxy names like utilities, staples, and the like as a balanced part of your portfolio.
And will volatility be more elevated from here?
History says yes, that you tend to get more volatility as the bull market steepens or gets further along. Keep in mind, too, we've had such huge liquidity over the last year, both from the federal government and from the Federal Reserve. That's going to be coming off the books. Most likely next year with a taper, and then the amount of federal government stimulus. Even if we do get this infrastructure spending bill, it's not going to be as big of an immediate shot in the arm as what we saw with the COVID plans. And so you take some liquidity away. Think of it like shock absorbers on your car. If the shock absorbers aren't quite as strong, you're going to feel the bumps more often.
So you think that the fiscal cliff is maybe the biggest concern for 2022?
Well, I'd say the biggest concern from 2022 is that the great earnings numbers that we've seen over the past few quarters are not probably going to repeat themselves. I mean, we're on pace for the best beat rate ever for the S&P 500. Percentage of companies beating expectations in Q2. That's the fourth record in 5 quarters. That's going to be hard to repeat just because the comps get tougher. And analysts are going to start picking this up. They've been so low with their estimates. They're probably going to have more realistic estimates next year. And so you're not going to have that going on.
Ed, how do you choose mid-caps? So do you stay away from those that could actually be negatively hurt by rising inflation?
That's when we talk about mid caps, what we're really looking at is the cycle between large and small, where small caps get most of their net gains in an entire economic expansion in the first year of the bull market. And so obviously we're past that point now. And so you want to be focused more on mid and large. But in the mid part of the cycle where we think we are, actually mid caps can still outperform large caps because they still have higher beta. That is, they tend to go up a little bit more than the market when it goes higher. But they also are large enough that they don't get hit as quickly by, say, rising interest rates or something like that from that small caps do. So it's kind of a sweet part of the cycle. They're also less appreciated. There's fewer analysts that cover mid caps than large caps. There's fewer assets in mid cap ETFs and mutual funds that are in small caps or large caps. So it's a way to get exposure beyond just sticking with your same mega cap names without necessarily getting hung up in maybe some problems that small caps can run into.
Ed, thank you so much. Ed Clissold there, Chief U.S. Strategist at Ned Davis Research. Now turning to the second most valuable cryptocurrency behind Bitcoin. On the latest episode of Bloomberg Studio 1.0, Emily Chang speaks with the creator of Ethereum about the future of digital coins alongside existing currencies.
Replacing the dollar completely is unlikely, just because there's things that the dollar provides, like price stability, for example, that Bitcoin is not going to provide. I think even in a theoretical world where the US dollar collapses, even then, I think Bitcoin is not going to be able to provide the level of stability that users and businesses expect to be able to set prices in. And in that kind of world, we would need something else. It could be decentralized stable coins, it could be something else, but we'll see. But at the same time, I think cryptocurrency can still have a very powerful and important role alongside existing currencies.
Well, that was a co-founder of Ethereum, and you can catch the full conversation tonight on Bloomberg Studio 1.0 at 9:30 p.m. in New York. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem pros amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
In your wildest dreams, think Moderna would change the world in the way that it has.
The ability for this technology to be used overnight to fight against this very nasty virus, and that we did not imagine.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, one bank after the next has increased pay for junior bankers in recent weeks, including Goldman Sachs. The development shows just how much the tables have turned and how much banks, just like many other companies right now, are desperate for talent. It's today's big take and the cover story for the latest issue of Bloomberg Businessweek. Let's get more on this with our Bloomberg opinion columnist, Marcus Ashworth. Marcus, thank you so much for joining us. So nice to see you in the studio. Look, I mean, it's incredible because there's always been war for talent, right? But it used to be the senior people. Does the pandemic actually shift the focus onto juniors and retaining them with more money?
Not really, and I don't quite understand why all these banks are raising the ante, because they're getting the same people, they're just paying more for them. And all the complaints have been about working conditions, not the actual pay for the work. So it just seems chasing everyone's tail. Goldman the last to do it, but then they can afford to be the last. And normally what they do anyway is they wait to everyone else, other banks, to train up people for the first 2 or 3 years, all the expensive bit, and then go poach them anyway, which I'm sure they will do. So I think it's across the whole chain that the wages are rising, and the reason of that is because it's been boom times. I mean, the banks have never made so much money.
I mean, if you're a kid graduating from college now and you can work at any of these banks, do you still want to go to Goldman Sachs anyway, regardless of the fact that they're giving you $10,000 more? I mean, are they just doing that for bragging rights rather than to attract talent?
Exactly. Spot on. You still want to join Goldman. I wish I could say differently, but it is simply that. They are probably still the elite place to go. There are a handful of others who are equally good, but the question really is not so much is it Goldman versus Morgan Stanley versus JP Morgan are all equally excellent. It's whether it's private equity or it's tech or it's doing something, starting your own startup, and that's the real competition.
Well, and Marcus, there's a lot that goes into compensation. It's not just salary for banks, bonuses, but then there's also things like benefits and work-life balance. I mean, how does that factor into this equation here?
Well, I should always remember my first job. The thing we got most excited about is a thing called luncheon vouchers, which was £20 per month, which you could only use in certain stores. But that was the thing we got all excited about. It is, of course, about the bigger, wider package. And really what we're talking about here is the bottom of the inverted triangle. The starting wage is not what these people go join Goldman Sachs or any of the banks for. It's the bonuses which accrue as the years go by.
Right. What does happen in years go by? So then you get poached by others. What I'm surprised about is how much retention is there for these junior bankers? So how many of them, when the crop is up, get paid $100,000, then get on to managing partners?
Well, that's the whole point. They witter them down and they poach the best people from elsewhere. So the competition in that intake pool is intense because you know probably 50% are not going to make it. And it's not just because they aren't going to end up with 100% the same numbers, it's they're going to take in best people from other banks, and that's what keeps them on their toes. But yeah, it's a nice position to be in. An extra 10 or 15,000 always helps.
I wonder how much longer we're going to see them clustered around New York and London. Is that a forever thing? Because I'd much rather work in like Jackson, Wyoming or San Diego, California.
I think you have to read the body language of JP Morgan, Morgan Stanley and Goldman in particular. They're very clear. They want people back in the office, and that principally means Wall Street. And the same, I think, in the City of London. Look, Europe needs to create its own financial markets, and it's clearly doing so. But I think the hiring will come from indigenous areas. It won't just be people who've been transferred from London. And I think as the years go by, I think people will slip back to London because still it's the best, most attractive place to work for the majority of people. Now, not necessarily for everyone, but it is for the majority.
Oh, come on, let's say it's the most fun city in the world.
It is. Well, Frankfurt on a wet Wednesday afternoon has its charms.
Its charms.
Yes.
Understated political or British politeness. Bloomberg opinion columnist there, Marcus Ashworth. Now, you can read all about Wall Street pay in the latest issue of Bloomberg Businessweek. Coming up, fighting the Delta variant, more on Moderna's vaccination efforts. Next, from co-founder Noubar Afeyan. This is Bloomberg.
session started and wrap up the trading week.
News.
Who knew that one earnings story could tank the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, with governments around the world debating whether to authorize COVID-19 vaccine booster doses, Moderna co-founder and chairman Noubar Afeyan envisions a time when the shot could actually become routine. He discusses Moderna's efforts to fight the Delta variant and beyond on the latest episode of the David Rubenstein Show Peer-to-Peer Conversations.
We are, as technology developers, preparing for any eventuality, including looking at what our baseline vaccine after 2 doses does, which so far 6 months data we have available is very, very robust. We haven't seen any real deterioration of our protection. That's first. Against the Delta virus, we have very strong protection, and we expect that will continue for a period of time. The problem is we don't know for how long, because you find out when your guard is down after your guard is down. So in order to prepare for that eventuality, we have begun to make variant vaccines that have different sequences that, if needed, we could accelerate so that we can actually use that. So I think we're going to work very closely with regulators, FDA, CDC here, and the Europeans, to figure out from an arsenal of... The beauty about the mRNA technology is that we can actually do this type of rapid response versus conventional biotechnology that takes years and years to do the same thing.
Well, to get to the heart of the problem, my own personal situation, so I got 2 Moderna shots. Do I need a booster shot?
I think that the best advice so far is that people, after a certain age, and I cannot tell you right now what that age cutoff will be because that'll be set by the government, are most likely going to need a booster to be well protected against the variant. And over time, again, public health officials are going to have to decide if everybody should get a booster shot. My guess is that given enough time, we may well end up in a situation where we have yearly, let's say, at a minimum, yearly vaccinations, just like the flu.
So Tony Fauci has said that we should use this example of what happened with the coronavirus to prepare for other potential viruses down the road, and that hopes companies like yours will do that. Are you working on that kind of thing now already? Or?
Absolutely, absolutely. A very big part of Moderna's future will be in being the leading vaccine developer, but also with mRNA technology, but also additional new technologies that we're considering to augment our capability. But I should also say that within the broader flagship pioneering context, which is where I operate, we have multiple projects as well looking to expand the security net for future pandemics.
Well, that was the Moderna co-founder and chairman, Noubar Afeyan. And you can catch the full interview tonight on the David Rubenstein Show, Peer-to-Peer Conversations, 9 p.m. in New York, 7 p.m. in London. I don't think actually that matches, but there are a couple of times it will be played out. Tom Keene, co-anchor of Bloomberg Surveillance, now joins us. Tom, I actually thought you were going to show me a VIX chart, but you have an initial jobless claims chart.
That's a good point. VIX out to 18 from, say, a 15, 16 level, and the drawdown's been huge. It's less than 1% on Standard & Poor's 500. Dow's down a little bit more. The market's a little bit upset. I'm watching Swiss franc, but what I want to do, Francine, is get to tomorrow, which is jobless claims, which should be another reaffirmation of what Chairman Powell cares about, which is wage inflation. It's not there. That gives him comfort.
So wage inflation isn't there yet, and he's trying to bring it on. Is that the point?
It's not, well, that's a good question. The answer is, man, I'm not sure he wants to bring it on per se, but they'd like to see a better labor share. It hasn't happened yet. And, you know, it's just a key inflation variable that hasn't happened. Claims have to improve and continue their improvement.
And Fed minutes, Tom, what would you be looking out for?
Yeah, everybody knows, Kaylee, I'm not big on Fed minutes. Several of the 5 a.m. Bloomberg surveillance team had coffee. Some of them dreamt about Ducati motorcycles. A few started worrying about, you know, like When should we leave the wedding? I mean, you know, different things here. Several, select few. That's what the minutes are. I don't watch them.
Okay, if you don't watch that, I mean, if we go to, but what are the markets watching, Tom? Never mind what you're watching.
That's a good question. What are the markets watching? I think they're watching two things. They're watching the foundation of earnings, which is GDP. Morgan Stanley marked down yesterday from a 6.9-ish down to about, excuse me, 6.5. And I think you're going to see some GDP markdowns off of sort of the soggy retail that we saw. That's what they're watching.
All right, some would agree with Tom Keene.
Several.
A few would disagree with Kaylee. Tom Keene, the co-anchor of Bloomberg, so very, very few. Let's also take a look at what else we're watching today. Kaylee, you're looking at retail sales.
Well, I'm looking at retail earnings. We get a few or several of them today and really throughout the rest of this week, Francine. Of course, we had Walmart and Home Depot yesterday. We get their two biggest competitors this morning, Lowe's and Target. So will they echo kind of the same trends? Of course, for Lowe's, do they show the same pullback in that growth in home improvement that was seen throughout the pandemic? That's what we saw yesterday with Home Depot and that big comp sales miss. And then with Target, like Walmart, I'm going to be paying attention to e-commerce sales, but of course for any retailer, Matt, we also have to watch the margins.
I got to say, I'm right there with you, Kaylee. When it comes to markets, I'm watching retail earnings as well. I'm going to be following these stories as they come across the ticker. But when it comes to everyday life, I can't lie, I'm going to still watch the Afghanistan stories. When I'm in line at the dentist or sitting on the couch with Steve and looking at my phone, Afghanistan is first and foremost in terms of what I'm searching and what I'm reading.
Me too, and actually it's, you know, there's been some great opinion pieces also from our Bobby Gosh over here in London about the failure of actually the training of the Afghan army. The other thing I'm watching out, and this broke out about 15 minutes ago, Kaylee brought it to our attention, is Pictet seeing that Boris Collardi is leaving the company effective September 1st. Remember, Collardi was also reprimanded earlier this year by the financial regulator in Switzerland over a money laundering probe. He was chief executive Julius Baer until 3 years ago when he joined Pictet. So it's interesting to see exactly how that will develop. More Bloomberg surveillance is coming up ahead. We'll also hear from Nicolai Tangen, the Norges Bank Investment Management Chief Executive Officer. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
We had an exceptional Q2.
It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Fast
Stocks beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
Is already corrected. The 5 to 10% correction we were looking for has been happening internally.
This feels more like coming down from stimulus payments than it does reflecting Delta variant fears.
This is going to be a grinding market, one where the biggest challenge continues to be for investors to stay in the market.
You're starting to see the foundations now of a significant boost in productivity for the next 2 or 3 years.
We know that a taper is coming. The biggest disagreement on Wall Street right now, is it September, is it December? Guess what? It doesn't really matter in the grand scheme of things.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market down 6. We decline. We're negative 0.1% on the S&P. Tom Keene following the biggest one-day slide in about a month on the S&P 500.
Biggest one-day slide in at least 26 days. The drawdown, John, is absolutely extraordinary. Let's look at the broad drawdown right now. Horrible. Under 1% SPX, Dow drawdown 1.2%. But John, to be serious here, Afghanistan and the rest is really beginning to color the Washington fiscal linkage, and then that into the market after the economic data we saw yesterday.
Tom, you're right to bring it up. We've talked about it many times. To what degree the issues abroad now will overwhelm the domestic effort? Do you think we're at that point at the moment?
I think we're in a
discussion?
shift here. I think everybody's numb. Read the Condoleezza Rice. We'll feature it with Anne-Marie Horton here in a bit. I mean, everybody's starting to think about this. But, John, I'm going to suggest this seriously, with great respect to the soldiers that fought and died and so many injured. We're in shock, and only today am I beginning to see those linkages.
Well, you said yesterday you think this administration is in shock as well. Many people in this market, Lisa, responding to something as simple as a retail sales print. But Tom's right to bring that up and connect it to the next fiscal effort, because when you spoke to economists yesterday, they believe this was the payback after the stimmies, the stimulus checks earlier this year.
And Ben Emmons actually came out of Global Macro Advisors. He came out and he pointed to a correlation between 10-year yields and the approval rating of the president. And there actually is somewhat of a linkage, at least over the past number of months. And this idea here that as his popularity wanes, you are seeing Treasury yields go down. Causation is not correlation. Correlation is not causation.
This is Chicago
but
education.
here's, oh dear Lord, really we're going right there. But John, there is this feeling of a sort of coming together of a lot of different factors right now leading to this weaker feeling.
The outlook feels like it's on a knife edge, Tom. I think if we got a group of investors together right now, we could find some form of consensus, but it would have such low conviction going into year end and beyond.
We've got some guests today with real conviction. Look at the conviction of Ellen Zentner and her team yesterday, John. They marked down GDP 6.9-ish down to 6.5-ish, whatever. So I think the conviction's there, but I really want to emphasize, John, we're all in shock and we have to deal with that. And frankly, I would even go so far as to say maybe it's a new Jackson Hole.
We'll head down to Washington in about 10 minutes' time, Tom, and catch up with our Washington correspondent. Here's the price action this Wednesday morning. Is it Wednesday? Equity futures down 6 on the S&P. We're negative a little bit more than 1/10% on the S&P 500 after yesterday's slide. Major drawdown. In the bond market, yields unchanged on a 10-year. I knew I could wind you up about that. 126.50 on 10s. And euro dollar, Lisa, unchanged at 117.16.
And you said something that I want to just pick up on. You said that there is such dispersion in views, not a lot of conviction, and really the person who exemplifies that is over at Bank of America, where the yield forecast for the 10-year Treasury note is between 1% and 2%, depending on the outcome. Just to give you a sense of the range of potential interactions with the market, given how uncertain people are about the outlook. Adding to that uncertainty, 8:30 a.m., we get U.S. July building permits and housing starts after yesterday's disappointing data with respect to home building householder sentiment. Really weighing on some of these figures is the high house prices, the fact that lumber prices, yes, they have come down, but still the input prices still are much higher than they have been in the past, including labor, which is in short supply. 8:30 a.m. also, former Treasury Secretary Jack Lew is joining Bloomberg television. Interesting to see what he says about infrastructure, not only domestically, and how much he thinks that the Biden administration's plans have been stymied by some of the lack of popularity around some of his recent moves, but also on an international level as a way to counter China's Belt and Road Initiative. And then at 2 p.m., we get the meeting minutes from the last Fed meeting, the last Fed confab. How much are we looking at on the margins, the big three, the top of the Federal Reserve in terms of members and power, really looking to taper in the near term? And I've got to say, John, I was struck by the fact that food prices have gone up 31% in July year over year. This is not something that central banks typically take into account. But when you take a look at the real world consequences of this, perhaps you get a better sense of why the University of Michigan survey was such a huge disappointment on Friday and why you're seeing on the margins retail sales disappoint.
Lisa, it's such a good point. It's such a good point,
Tom. She had that chart out on Twitter.
It's the difference. It's the distinction between what the policymakers measure and what people on Main Street feel. And that's very different right now.
Well, with the uproar with Bill Dudley a number of years ago, of course, supporting Bloomberg with all of his good academics, and when he was New York Fed president, it was something about iPads or something. I can't remember the details. But yeah, there is that disconnect, John, and it's tangible. And, you know, I really sympathize with our viewers and listeners. They don't care about the Dallas trim mean.
Absolutely not. That's not what the bill looks like at the end of the month, Tom. You don't get to cut off the bits you don't like.
Really?
When you pay the bill.
That.
I mean, maybe you do. I don't. Let's get to our first guest this morning, Jeff Henriksen, Thorpe Abbott's Capital CEO and University of Oxford Senior Fellow. In your words, sir, equity's still the best pond to be fishing in. Why, Jeff?
Yeah, thanks for having me, guys. It's been a great time listening to you guys talk about everything. So I think we look at asset classes. We don't look at asset classes as some monolithic security that you need to either embrace or avoid. We look at every asset class as an opportunity set. And when we take a look at the market today, we think equities, you know, while headline valuations might look expensive, still provide the best opportunity set for investors to find, you know, places and ideas to place capital. That said, I think it's becoming more and more of a stock picker's market. I think you really have to understand the types of businesses you're buying, the valuations at which you're buying them. But if I had to pick one asset class that I want to be spending time diving into and really learning where I can find mispricing, equities is still that asset class. And I think that is a function of where we are with the recovery, although we've seen some headwinds recently that we can talk about, but recovery is still in place. You have inflation running hotter than most people would like to see, and yet you still have, you know, what is it, $4.5 trillion and stuck in money markets still. And I think I saw the other day that negative yielding assets, dollar assets globally are now back around like 17 trillion. So kind of where we are vis-a-vis the recovery, I think markets are still offsides here. And I think capital's incrementally going to go to equities.
Buried in your note, you talk about PE compression, where we get the ratios that we all look at compressed in. John Golub, who's at 5,000 SPX, feels the same way. How much can PE compress?
Well, I mean, they could compress. I guess my concern with PE compression really is around inflation, because the worst possible environment for stocks, in my opinion, and I think history proves this, is a period where you have slow growth and high inflation, a stagflation type of environment. And I think, you know, in the 1970s, you saw PE ratios go from I think like in the 60s around 18 times to below 10. And that's because inflation is very value destructive. And so I think part of the potential for compression is going to be a function with what happens with inflation. But that said, I think a lot of companies are, I don't know if I buy the idea that the S&P multiple is meaningful in any way. And the reason for that is I would say twofold. I'd say one, you know, if you look at historic multiples in the S&P, you have to look at historically, what's the S&P been made of? Well, if you go back, you know, 10, 15, 20, 30 years, I mean, industrial companies, a lot more commodity exposure, very capital intensive businesses. Whereas if you look at it today, the composure is much more heavily weighted towards tech, which, by the way, does a lot of investing through their P&L. So, you know, I'm not even sure if earnings are a meaningful number to put a multiple on for a company that's growing rapidly and investing a lot through their P&L. I mean, you know, we're expensing the costs to go out and acquire a customer. but those customers have very long lives and they can be very sticky. And there's an argument that you should be capitalizing those costs. So multiples are a tricky thing. And I think you have to keep an open mind with how you look at it.
All right, so Jeff, how do you then evaluate companies that you see as particularly good stock picks?
Well, I think we look at two types of situations, right? We're focused on either finding what we'd say are really traditional value trades or mean reversion trades. So assets or companies, equities and companies that are trading just meaningfully below what they're fundamentally worth. And then we try to find higher quality wide moat businesses where we think the growth component and the reinvestment opportunity that the company has is misunderstood by the market and mispriced. So those are the two buckets we look at. Last year, that first bucket is where we found all the opportunities. Right now, most of those have already mean reverted. I'm not seeing a lot of opportunities in the deeper value part of the market. What I'm finding more opportunities on are kind of smaller growing businesses where I think that growth opportunity is mispriced. So how we try to evaluate that is we try to identify what is the true reinvestment opportunity and what's the true amount these businesses are really reinvesting. So we try to look at the P&L and we pull out expenses that we think should be capitalized, reconfigure their income statements and balance sheets to try to really get an understanding of the incremental returns that they're earning and the value that they're creating. And to do that, you can't just apply a multiple to a bunch of companies like it's some monolithic thing. You have to get in and understand the economics of those businesses to do that. And so that's why I say it's a stock picker's market.
A man who does his homework. Jeff is going to catch up. Come back soon. It's been too long. Jeff Hendrickson there, Thorpe Abbott's Capital CEO. Just some of the things to think about this morning, Tom. Equity futures down a little bit more than 1/10%. What are we? A whisker away from all-time highs after yesterday's move lower by 0.7%, 0.8%, whatever it was.
And watch the VIX 18.8. John, one thing I would point out is Swiss franc. I look at Euro Swissy, and it's the one indicator, the one tea leaf that's giving us a little bit of angst this morning.
Well, Tom, I'd add to that. I'd say look at what's happened with energy as well. Real concern around energy, both equity and credit, but also the commodity itself, oil. A lot of people have had to rethink the demand scenarios going into year-end and beyond now, Tom. Given what's happening in Asia, we're talking about a COVID elimination strategy in places like China. Tom, when you think about that, that means the tolerance is so much lower than compared to the United States and Europe. And these places begin to introduce restrictions and start to shut down economies again. I'm looking at New Zealand. That starts to have an effect over time.
It have an effect over time, and the interdependencies here are pretty evident again as we are in shock over Afghanistan.
We'll head down to Washington, D.C. next to cover that story and catch up with our Washington correspondent who is in the room in that news conference yesterday with the National Security Advisor, Jake Sullivan. That's next from New York. This is Bloomberg.
With the First Word News, I'm Laura Wright. The Biden administration says it has cleared the way for Americans to travel to Kabul airport to leave Afghanistan. U.S. officials say they have assurance of safe passage from the Taliban. About 11,000 Americans have said they're in the country. Roughly 3,500 U.S. troops are on the ground providing security at Kabul airport. There are also numerous Taliban checkpoints there. British Prime Minister Boris Johnson is rejecting calls for a formal inquiry on Afghanistan. He says the Taliban took over the country even faster than they expected. Johnson also said it would have been impossible for British troops to stay in Afghanistan without an American military presence. Texas Governor Greg Abbott has used executive orders and court rulings to fight mask mandates and other anti-pandemic measures. Now he is isolating in the governor's mansion after testing positive for a breakthrough case of the coronavirus. Abbott is fully vaccinated. He's receiving antibody treatment. T-Mobile US says over 40 million customer records were affected in a cyber attack. About 7.8 million current customers had their information stolen. The other information came from past or prospective customers who'd applied for credit. T-Mobile is offering people affected by the attack 2 years of identity protection services. Global news 24 hours a day on air and in Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
We are engaging diplomatically at the same time with allies in regional countries and with the United Nations to address the situation in Afghanistan. We are in contact with the Taliban to ensure the safe passage of people to the airport.
A tense news conference down in Washington, D.C. That was Jake Sullivan, the U.S. National Security Advisor from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. We'll catch up with Anne-Marie Hordern, our Washington correspondent, in just a moment. Your equity market down 6 on the S&P, Tom. We declined a little more than 0.1%. Your equity market a bit softer through the last 24 hours. Yields unchanged, TK, 126.67 on 10s. Your Fed minutes out a little bit later.
Global markets linked into what we see in Afghanistan and certainly a changed and furious international relations set. Right now, let us look at one of the opinions that we've seen. This is the former Secretary of State, Condoleezza Rice, of course, always associated with Stanford University. Technically, our longest war is not Afghanistan.